Hey traders, today I want to introduce you to a powerful resource that can make a big impact on your trading journey. The audiobook Super Trader: Make Consistent Profits in Good and Bad Markets by Van K. Tharp. In Super Trader, Van K. Tharp delves deep into the mental game behind trading success. He doesn't just focus on technical strategies, he's all about creating a personalized approach to trading that aligns with your strengths, weaknesses, and goals. The book guides you through building a solid foundation for consistent profits by emphasizing discipline, risk management, and a growth mindset. Tharp's approach is unique because he believes that the real edge in trading isn't just about the strategy, it's about you as a trader. Whether you're new to the market or experienced, Super Trader can help you understand what it takes to perform well across all market conditions. It's packed with practical tips on how to navigate emotional highs and lows, which is crucial for making steady progress, especially during challenging times. If you're looking to up your game and develop a reliable, long-term approach to trading, this audiobook is a must-listen. Check it out and let me know what insights you find most valuable.
Super Trader. Make consistent profits in good and bad markets. Expanded Edition by Van K. Tharp. Introduction. The 5 Steps to Consistent Profits. The goal of this book is to help people develop a full-time trading business that produces consistent, above-average profits under various market conditions. This means that you can perform profitably in up markets, both quiet and volatile, down markets, both quiet and volatile, and sideways markets, both quiet and volatile. If you are reading this, you probably would like that sort of performance. To help traders reach this goal, I've designed a 5-step approach. My objective here is to familiarize you with the 5 steps you must take. 1. Work on yourself and your personal issues so that they won't get in the way of your trading. This step must be accomplished first, otherwise those issues will interfere with each of the other steps. 2. Develop a business plan as a working document to guide your trading. This plan is not to raise money, which is the purpose of many business plans. Instead, it's designed to be a continual work in progress to guide you throughout your trading career. The business plan actually helps you with all 4 of the other steps. It also includes an overview of the big picture influencing the markets you will be trading, and a method for keeping on top of those factors so that you will know when you are wrong. In the first issue each month of my free email newsletter, Tharp's Thoughts, I update my big picture view and include the updated market type analysis for the S&P 500. 3. Develop several trading strategies that fit your view of the big picture, and understand how each of them will perform in various market types. The ultimate goal of this step is to develop something that will work well in every possible market condition. It's not that hard to develop a good strategy for any particular market condition, including quiet and sideways. What's difficult, and maybe impossible, is to develop one strategy that works well in all market conditions, which is what most people attempt to do. 4. Thoroughly understand your objectives and develop a position sizing strategy to meet them. Probably fewer than 10% of all traders and investors understand how important position sizing is to trading performance, and even fewer understand that it is through your position sizing methods that you meet your objectives. Thus, the 4th step is to develop position sizing strategies for each system that will help you meet your objectives. 5. Monitor yourself constantly and minimize the number of mistakes you make. I define a mistake as not following your rules. Thus, for many people who have no written rules, everything they do is a mistake. However, if you have followed the first 4 steps, you will have rules to guide your trading, and you will be able to define a mistake as not following those rules. Repeating the same mistake is self-sabotage. By monitoring your mistakes and continuing to work on yourself, you can minimize their impact. People who do this, in my opinion, tend to produce consistent, above-average profits. Part 1. Working on yourself. Everything you do is shaped by your beliefs. In fact, your reality basically is shaped by your beliefs. What's a belief? Every sentence I've written, including this one, reflects my beliefs. Every sentence that comes out of your mouth reflects your beliefs. And your beliefs shape your reality. Even who you think you are is shaped by your beliefs. Let me give you an illustration of how this works. My niece from Malaysia came to live with us when she was 19 years old. My wife and I were putting her through college in the United States after she'd been with us for a year. One day she said to me, "Uncle, in my next lifetime, I would like to be born beautiful and talented." My niece is very artistic. She sailed through an art course and sings like she was born to sing. Coming from a liberal arts background, she got a degree in biomedical engineering, graduating cum laude. I think she passes the talent criterion with flying colors. As far as beauty, I describe her as one of the most stunningly beautiful women I've ever seen, and everyone who meets her comments on how beautiful she is. Thus, here was an incredibly beautiful and talented woman who, because of her beliefs, didn't think she had those qualities at all. Your reality is shaped by your beliefs. By the way, I've been working on those beliefs of hers since she's been living here, and she's finally coming around. Similarly, how you trade is shaped by your beliefs. You do not trade the markets. Instead, you trade your beliefs about the market. One of the key aspects of working on yourself is to examine your beliefs to determine whether they are useful. If they are not useful, find beliefs that are. This is a key aspect to working on yourself. You probably will never be free of limiting beliefs or all aspects of self-sabotage during your lifetime. But I consider this step complete when you transform 5 very limiting aspects of your life and feel very differently about each one. Once you've accomplished 5 such transformations, I consider you capable of generally overcoming the future roadblocks that may come up in your trading. Part 2. Developing a working business plan. The business plan part of trading includes Step 1. In fact, a good trading business plan includes a thorough examination of the person who is doing the trading, beliefs, issues, strengths, challenges, and goals. Everything you can think of about yourself should be included in this document. However, the plan also should include many other important things. Your assessment of the big picture and how you'll keep up with it. For example, I wrote about the possibility of a huge secular bear market in 2001 when I first started working on my book, Save Strategies for Financial Freedom. I decided that the big picture should include 1. A general assessment of the stock market in the United States and worldwide. 2. A general assessment of the strongest and weakest areas of the world for investments. 3. A general assessment of the strength of the dollar, or your home currency if you are not using the US dollar. And 4. A general assessment of inflation or deflation potential in the future. I also developed ways to measure each of these elements, and my way of keeping up with them is to write a market update each month in my newsletter. Business systems. These include how you will do research, monitor your data, market yourself to your family or clients, monitor yourself, manage your cash flow, and keep track of your trades and performance. Running a trading business involves many systems other than trading systems. To have a successful trading business, you'll have to master those other systems. Several trading strategies that fit the big picture and that work when conditions change. For example, strategies that work in volatile bear markets, for example 2008, are quite different from strategies that work in quiet bull markets, for example 2003. A worst-case contingency plan. You'll need to be prepared for anything major that could upset your trading business. This sort of planning often takes as long as 6 months to complete. Part 3. Developing a trading system. In 1999, everyone in America seemed to be a stock market expert. When we were giving a stock market workshop at a hotel in Cary, North Carolina, we overheard one of the bartenders say, "Perhaps we should take Dr. Tharp's workshop." The second bartender responded, "No, I don't need that. I could teach a workshop like that." Similarly, a waiter in a high-class steak restaurant informed us that he was really a trader but worked at a restaurant part-time at night. He'd already made over $400,000 trading and considered himself an expert trader. My guess is that these people didn't survive the period 2000 to 2002, much less the market in 2008. Why? They were different markets, and a strategy of buying and holding high-tech stocks that worked in 1999 has had mixed to horrible results in the years since then. However, a strategy of buying inverse index funds as soon as the market signaled a clear bear market in 2007 worked wonders in 2008. You need to know what kind of market we are in. I believe that there are as many as 20 different market types based on direction and volatility. For direction, there are 5 types of moves: very bullish, bullish, sideways, bearish, and very bearish. As for volatility, I see 4 conditions: super volatile, volatile, normal, and quiet. For any given period, the market is a combination of those 2 criteria. Here are a few examples: very bullish normal, sideways volatile, or bearish super volatile. Note: I have yet to find any bullish super volatile periods. Your definition of market type might be different depending on your investment or trading perspective. However, I look at 13-week rolling windows. I calculate the system quality number, squadron, a proprietary indicator, for the market's daily percent change over the last 100 days. Super bullish is a score of 1.5 or greater, bullish is between 0.75 and 1.5, neutral is between 0.75 and 0, bearish is between 0 and minus 0.45, and super bearish is when the indicator is below minus 0.45. I also measure volatility using the market's, again the S&P 500's, average true range, 20-day ATR, as a percentage of today's close. I call this the ATR percent, and I use it to determine the mean and standard deviation for all 20-day windows. When the ATR percent is more than 3.0 standard deviations above the historic mean, the market is considered to be super volatile, and that occurs only during bear markets. When the ATR percent is between 3.0 and 0.5 standard deviations above the mean, it is volatile. When the ATR percent is between 0.5 and minus 0.5 from the mean, it is normal. And when it is below 0.5 standard deviations from the mean, it is quiet. As a rule, bull markets tend to be volatile to quiet, while bear markets tend to be normal to very volatile. Table I-1 summarizes 58 years' worth of data according to market type for the S&P 500. Notice that very volatile conditions have not occurred in strong bull or bull markets. Similarly, quiet conditions are very rare in strong bear markets. Typically, most people attempt to develop one strategy that works in all types of markets. The waiters, bartenders, and most others for that matter, usually fail for this reason. However, there is good news. It's not that hard to develop multiple strategies so you can have one that will work well in each kind of market. What's difficult is to try to find one that will work well in all conditions. However, you don't have to do that if you simply monitor market conditions and are ready with multiple systems. Part 4. Understanding the importance of position sizing strategies. In our workshops, we typically play a marble game. Marbles are placed in a bag to represent a trading system. For example, 20% of the trades in a system may result in 10R winners. Since R is short for what you risk, a 10R winner is one for which you make 10 times what you risk. The system also may include 70% 1R losers, meaning that when one of those marbles is drawn, you lose whatever you risk. Finally, the system may include 10% 5R losers, meaning that when those marbles are drawn, you lose 5 times what you risk. The marbles are replaced after they are drawn so that your odds remain the same after each draw. Now, some of you might be thinking, but you'll lose 80% of the time. How can you possibly make money? Let's say there are 100 marbles in the bag. If you total the R values of all the marbles in the bag, you'll find that they add up to plus 80R. That means that on the average, you'll make 0.8R per pull over many marble draws. Thus, the expectancy of the system, the average R value, is 0.8R. After 100 trades, you'll probably be up about 80R. If you risked about 1% on each marble pull, after 100 pulls, you'd probably be up more than 80%. Perhaps now the system doesn't seem so bad. When I play the game, I usually provide the audience with different incentives. For example, I might say that if you go bankrupt, you are out of the game and have to pay a fine of $10. I also might say that if you end the game down 50%, you have to pay a fine of $5. I could also say that if you lose money by the end of the game, it will cost you $2. On the positive side, I might say that if you make money, you'll win $2. If you make 50%, you'll win $5. I also might say that if you make the most money, you'll win whatever is left in the pot, say $100. Note how my incentives set up a number of objectives for the game. For example, here are 3 possible objectives. 1. To win the game at all costs. even if that means bankruptcy along the way. The person who wins the game usually has this objective. 2. To win at least $2, and make sure you don't lose more than $2. Note that this is an entirely different objective. 3. To win the game but make sure you don't go bankrupt. Again, this is an entirely different objective from the first two. When I tell people how to strategize about the game, I suggest that they answer the following questions. Who are you? What are your objectives? What is your position sizing strategy, that is, how much you will risk, to reach your objectives? Under what conditions might you be willing to change your position sizing strategy? If 100 people play the game, starting with $100,000, and all get the same trades, that is, the same marble pulls randomly made and replaced, chances are that there will be 100 different equity amounts at the end of the game. Also, you will be able to group people according to their objectives. For example, those who try to make money and have minimal losses will have a small fluctuation of equity of about 5% to 10%. However, those trying to win the game will have huge equity fluctuations that range from bankruptcy to making millions. The game dramatically illustrates what is really important to trading success: the how much variable of your position sizing method. Thus, a key step for anyone wanting consistent profits is to develop a trading system with a positive expectancy, and then develop a position sizing strategy that maximizes the probability of meeting one's objectives. This hugely important step is largely ignored by most traders and investors, including most professionals. Part 5. Reducing mistakes and other ways to make more consistent profits. What happens when you don't follow your rules? You make a trade when your system didn't tell you to trade. You are supposed to get out when your stop is hit, but you don't get out. Your position size is way too big on one particular trade. Those are all mistakes, and mistakes can be very costly. We've done some preliminary research on the cost of mistakes, and the results suggest that for futures traders, mistakes can run as high as 4 Rs per mistake. If a person makes just 10 mistakes in a year, that person could find his or her profits dropping by about 40 Rs. That means that if he or she made 50% on the year, that investor could have made nearly 100%. If he or she lost 20%, then mistake-free trading could have made that person profitable. For swing traders who are trading equities, the mistakes seem to be worth about 1 R. Thus, if you made 10 trades a week with an expectancy of 0.4 Rs, you'd make 4 Rs. But if you made 1 mistake each week, you'd lose about 25% of your profit. For long-term investors with wide stops, mistakes probably cost about 0.4 Rs per mistake. The total cost per year with 10 mistakes is about 4 Rs. However, the average investor is lucky to make 20% per year, and so 10 mistakes could easily cost an investor 20% of his or her profits. The final step that you must concentrate on is to minimize the impact of mistakes on your trading. This amounts to developing a disciplined routine in your trading and continuing to take step 1, working on yourself. Part 1. Working on yourself. The components of trading well. I'm a neuro-linguistic programming (NLP) modeler and a coach for traders. As an NLP modeler, I encounter a number of people who excel in something, determine what they do in common, and then determine what beliefs, mental strategies, and mental states are required to perform each task. Once I have this information, I can teach those tasks to others and expect to get similar results. My job as a coach is to find talented people and make sure they learn and follow the fundamentals of my modeling work. I remember doing a workshop with the market wizards Ed Seykota and Tom Basso around 1990. All three of us agreed that trading consists of 3 parts: personal psychology, money management, which I subsequently renamed Position Sizing Strategies in my book, Trade Your Way to Financial Freedom, and system development. We also agreed that trading psychology contributes about 60% to success, and position sizing strategy contributes another 30%, which leaves about 10% for system development. Furthermore, most traders ignore the first 2 areas and don't really have a trading system. That's why 90% of them fail. The components of trading well. After years of extensive modeling in all 3 areas, I now disagree slightly with our conclusions in 1990. First, I would argue that trading psychology accounts for 100% of success. Why? This conclusion is based on 2 findings. First, people generally are programmed to do everything the wrong way. They have internal biases that seem to lead them to do the exact opposite of what is required for success. For example, if you are the most important factor in your trading, you should spend the most time working on yourself, but the majority of people totally ignore the you factor in their success. Read over the checklists in this part that deal with good trading. If you've worked extensively in all the areas listed, you are probably very successful and are certainly a rarity. Second, every task I model requires that I find the beliefs, mental states, and mental strategies that are involved. All three ingredients are purely psychological, so it's hard not to conclude that everything is psychological. I now think that there are 6 components to trading well. 1. Developing and consistently maintaining a trading process. The trading process encompasses all the things you need to do on a day-to-day basis to be a good trader. 2. Understanding the wealth process. To trade successfully, you need to explore your relationship with money and why you do or do not have enough to trade with. For example, most people believe that they win the money game by having the most toys, and that they can have it all right now if their monthly payments are low enough. This means that they save $0 and are over their heads in debt. If this is you, it also means that you don't have enough money to trade. Not understanding this process is one of the major reasons that individuals, corporations, and governments in the United States and around the world are in such deep debt. 3. Developing and maintaining a business plan to guide your trading. Trading is a business. The entry requirements are much easier than they are for other types of business, because all you have to do is deposit money in an account, sign a few forms, and start trading. However, the entry requirements for successful trading require that you master all the areas listed here. That requires a lot of commitment, which most people do not have. Instead, they want trading to be easy, fast, and very profitable. 4. Developing a system. People often consider their system to be the magic secret for picking the right stocks or commodities. In reality, entry into the market is one of the least important aspects of good trading. The keys to a money-making system are elements such as determining your objectives and the way you exit a position. 5. Developing position sizing methods to meet your objectives. We've discovered through our simulation games that 100 people at the end of a set of 50 trades will have 100 different equities. They will all get the same 100 trade results. This extreme variability of performance can be attributed to only 2 factors: how much they risked on each trade, that is, their position sizing methods, and the personal psychology that determined their position sizing decision. 6. Avoiding mistakes. I've seen many short-term trading systems that would allow you to make 2R, twice your risk, per week or more. If you risked 1% of your equity on each trade, you would consistently make well over 100% each year. But most people cannot do this because they trade at about 70% efficiency or less. This means that they make 3 mistakes, meaning they don't follow their rules, every 10 trades. This will turn any winning system into a losing system. Based on the 6 components of trading well, rate yourself by asking the following questions. How well have I mastered the discipline of trading well each day? Do I do a daily self-analysis or a daily mental rehearsal to begin each day? If not, why not? I will give you a lot of ideas about how to improve in this area in the remainder of this book. Do I really have enough money for trading to make sense? If you do not, you probably need to work on yourself and the wealth process. Do I have a working business plan to guide my trading? If you don't, you are not alone. We estimate that only about 5% of traders have a written business plan. Then again, perhaps you've heard that only about 5% to 10% of all traders are really successful. Part 2 of this book will guide you toward developing this kind of working document. Do I have a set of objectives thoroughly written out to guide my trading? Most people don't. How can you develop a system to meet your objectives without having objectives? Have I paid attention to the how much factor, that is, my position sizing strategy? Do I have a plan for using my position sizing method to meet my objectives? It is through position sizing strategies that you either meet or fail to meet your objectives. How much time do I spend working on myself? You have to overcome your psychological issues and develop the discipline necessary to carry out the processes described above, which are necessary for success and for avoiding mistakes. Most of the items described here could be the topic for an entire book. However, my intention is to give you an overview of what is required for successful trading, and my job as a coach is to find talented people and coach them on following the fundamentals I've described here. Do an honest self-appraisal. Peak performance traders are totally committed to being the best and doing whatever it takes to be the best. They feel totally responsible for whatever happens and thus can learn from mistakes. These people typically have a working business plan for trading because they treat trading as a business. That business plan gives them the confidence to do what they need to do, to make large returns from the market and learn from the mistakes they make. The first section of this book is not about some hot new investment. It's about how to be in the best possible condition mentally to trade at a peak level. My favorite cartoon character is Sam, the trading tiger, shown here looking inside himself. Sam will be guiding us through the process of successful trading/investing. Getting started. Some concepts you must master as a trader. First, you need a strong initial evaluation of yourself and what you need to do to improve your performance. Look at it this way. Suppose you are in the middle of the desert. There are no roads, but you have a map indicating where you are to go. However, what's missing from the map is an indication of where you are now. Remember that you are in the middle of the desert. How can you get where you want to go when you don't know where you are? Similarly, how can you work on yourself as a trader if you don't know much about yourself? That's the situation most people face. They think they know themselves well, but they really don't know anything about themselves. Have you, for example, made an inventory of your beliefs about yourself? Second, if you want something, you must practice being it. Being comes before doing or having. In my opinion, most people want to trade well, but their primary concern is how to do it and have success. You must practice being a successful trader first. From that state of mind, you will get information about what to do, and that will produce what you want to have. Many people also believe that they must struggle and work hard to get ahead. This is the antithesis of the statement above about being successful. If you believe you must struggle to become successful, you probably will struggle a lot. Third, many traders have what I call the perfectionism complexity complex. In other words, what you have is never quite good enough. It can always be improved in some way. There is always another exit or another entry that will make it better. What this means is that you always will be struggling with new ideas. Consequently, you never will get to the real issue of trading and just being a trader, doing trading. Instead, there is always one more thing to test, always one more thing to do, and never enough time to just relax and trade. Give up complexity and move towards simplicity. The best traders are always those who practice simplicity. For example, at a recent seminar, one trader remarked, "I just buy what's going up. If it goes against me, I get out immediately. If it goes in my favor, I let it run. I've made a lot of money doing that." That is simplicity, but you can do it only if your mind and spirit are pure and you are paying attention to what the market is doing. It's purity of spirit that makes the difference. This particular trader always asks for internal guidance before beginning the trading day. I tend to believe that makes a big difference. Fourth, many traders and people in general have low self-esteem. If you don't believe you are worthwhile, that belief will tend to dominate everything else. You may believe, "If I can just make money trading, I'll feel better about myself." However, that belief actually is composed of two parts: low self-esteem and the belief that low self-esteem will be fixed by trading success. Unfortunately, that doesn't seem to be the case. Low self-esteem always seems to dominate and produce behaviors to justify itself, unless, of course, you are aware of it and do the kind of self-work that will improve your self-esteem. If you think that life is a struggle, it's probably because of your low self-esteem. The key to all these issues is to understand yourself and realize that you are the root cause of your results in trading. When you do that, you have started on the road to success. Think about the last loss you had in your trading. What caused it? Who was responsible for it? If your response is anything other than yourself, for example, the market, my broker, bad advice, you are not taking responsibility for your results. You will repeat mistakes over and over until you understand this. In contrast, if you are willing to accept total responsibility for your investment results, you begin to understand all the mistakes you've made and are able to correct them. The market will become your financial university. Moreover, you will realize that you are the most important factor in your trading or investment success. If you understand that, you are way ahead of the crowd. If you want to be good at something, you must design a method that fits you. That is possible only if you design the methodology to fit your beliefs, meet your objectives, and match who you are. I once had a call from a gentleman in England who had been working through my peak performance home study material. He said, I've been working through your course for over 6 months. It has helped me realize a lot about myself. But there is one thing it hasn't done. It hasn't given me a positive expectancy system. The ironic thing about that statement is that I had not attempted to provide a methodology in that course. It is about how to become a peak performance trader/investor so that you can design a method that fits who you are. Psychology is far more important than methodology. In fact, psychology is part of methodology. For example, when we attempt to help people develop a reasonable method that works, they resist the process strongly because they have so many biases that keep them focused on the wrong aspects of trading areas that have nothing to do with success. It is very difficult to show them the correct direction. The best thing you can do to increase your income from the market is to determine how you are blocking yourself. This should be done at 2 levels. Whenever you develop a trading business plan, a large part of that plan should have to do with introspection. Take a look at all your beliefs. Are they useful beliefs, or do they hinder you in some way? What are your strengths and challenges? What about yourself can't you see clearly, because you are part of it? You should consider doing this sort of assessment at least once each quarter. The second self-appraisal you need to make is at the beginning of the day, and perhaps even hourly throughout the day. What's going on in your life? Are you ready to face the markets? How are you feeling? Is some sort of self-sabotage surfacing in you? For example, are you starting to get too confident? Are you starting to get too greedy? Do you in any way want to override your system? The best traders and investors constantly do this sort of self-assessment. If you want to make more money in the market, perhaps you should start doing it too. To help you with your self-assessment, I developed a quick 17-point questionnaire you can use to evaluate yourself. Take it and pass it on to your friends. I'm sure you'll all get some insights into your performance. Answer each question with true or false. 1. I have a written business plan to guide my trading/investing. True or false? 2. I understand the big picture about what the market is doing and what is affecting it. True or false? 3. I am totally responsible for my trading results, and as a result I can correct my mistakes continually. If either part is false, all of this statement is false. True or false? 4. I honestly can say that I do a good job of letting my profits run and cutting my losses short. True or false? 5. I have 3 trading strategies that I can use that fit the big picture. True or false? 6. For my first trading strategy, I have collected an R multiple distribution of at least 50 trades. That is, from historical data or live trading. If you don't know what an R multiple distribution is, you haven't collected one, so answer false. The R multiple distribution will be discussed later in this book. True or false? 7. For my second trading strategy, I have collected an R multiple distribution of at least 50 trades, that is, from historical data or live trading. True or false? 8. For my third trading strategy, I have collected an R multiple distribution of at least 50 trades, that is, from historical data or live trading. True or false? 9. For each of my trading strategies, I know the expectancy and the standard deviation of the distribution. True or false? 10. For each of my trading strategies, I know the types of markets in which they work and in which they don't work. True or false? 11. I trade my strategies only when the current market type is one in which the strategies will work. True or false? 12. I have clear objectives for my trading. I know what I can tolerate in terms of drawdowns, and I know what I want to achieve this year. True or false? 13. I have a clear position sizing strategy to meet my objectives. True or false? 14. I totally understand that I am the most important factor in my trading, and I do more work on myself than on any other aspect of my trading/investing. True or false? 15. I totally understand my psychological issues and work on them regularly. True or false? 16. I do the top tasks of trading on a regular basis. True or false? 17. I consider myself very disciplined as a trader/investor. True or false? Give yourself 1 point for each true answer. Be honest with yourself. Fill your score in the blank. Let's take a look at how you rate. 14 or more. You have the makings of a great trader/investor and probably do well in the markets. 10 to 13. You have a lot of potential but probably are making some major mistakes. For many of you, these may be psychological mistakes. 7 to 9. You are way above average but haven't graduated to the big leagues yet. You are like a high school football star trying to move to the NFL. 4 to 6. You are better than the average investor on the street, but have a long way to go to hone your skills. You probably need to work on yourself, your discipline, and your trading strategies. 3 or fewer. You represent the average trader/investor. You probably want someone to tell you exactly what to do, and you expect to make big profits now. When it doesn't happen, you look for a better advisor or guru to help you. Guess what? It doesn't work that way. If you answered true to questions 3 and 12, you have some potential. And if you are willing to commit yourself to excellence, you could move to the top of the scale in a few years. In a study in the Journal of Finance, entitled Trading is Hazardous to Your Wealth, 2 researchers studied 66,465 online trading accounts for a period of 6 years, from 1991 through 1996. They found that the average trader's returns were 11.4%, about 6.5% less than the overall market return of 17.9% for that period. That's even worse than most mutual fund managers, who routinely do about 4.8% worse than the market. The conclusion, of course, was that people shouldn't trade. I think the conclusion should be modified. Trading is hazardous to those who don't do the necessary work to succeed. You'll get a strong boost toward improving your score from going over the material in this book, but you must do the necessary work. What's your trading type? Can everyone become a good trader? I tend to think not. Take, for example, the Turtles experiment, in which 1,000 people responded to ads in the Wall Street Journal, New York Times, and Chicago Tribune to be trained by Richard Dennis and Bill Eckhart in the Turtle system. The respondents all had to take a 52-item questionnaire. The top 40 were flown to Chicago for an interview, and fewer than half of them were selected and trained to become Turtles. Although Richard Dennis won the bet, Curtis Faith III says that he thought the experiment was a draw. Some of the traders were good, but many were not that great, and that was after an extensive selection and training process. What trader type are you? As an NLP devotee, I've always believed that if someone can do something well, that skill can be taught to anyone else. I have modeled all aspects of the trading process and developed workshops to train people in how to become great traders. However, not everyone has the mentality and commitment to do the work it takes to follow through on the training. Because of my findings over the years, I've come to the conclusion that there are certain trading types of personalities. Some of the types tend to make good traders, whereas others need to go through a real struggle to master what's important to trading. As a result of years of research, we have divided the universe of people into 15 different trader types. I can tell what type you are through your answers to a series of questions. For each trader type, I've developed a set of strengths and challenges, and I have found a prototype trader. Find out what trader type you are by going to www.tharptradertest.com. It's a free test. Spend a few minutes answering a questionnaire, and you'll find out your type and what you need to do to be successful. Do it now. It takes only about 5 minutes. Write your trader type in the space here. About half the trader types have a high potential to become successful, with the strategic trader being the most natural and the fun-loving trader being the least natural. It was interesting putting the scale together because one of my jobs was to find a prototype trader to fit each category. It was pretty easy to find good models for the trader types that tend naturally to be successful. Paul Tudor Jones is a good example of a strategic trader. However, the trader types that were not a natural fit had very few examples for me to pick from, because those kinds of people simply don't make good traders. For the fun-loving trader, I ended up choosing the CEO of Starbucks. He's definitely a fun-loving type, and because he's invested in his own company, I can call him a successful investor/trader. However, he is certainly not a Paul Tudor Jones, and never could be. Now that you've figured out your trader type, here are the 15 types, with some of the challenges for those types that tend to make better traders. 1. Strategic trader. This type of trader has a great chance of success. Your major challenges are that A. You are likely not to recognize emotional mistakes. B. You lean toward perfectionism. And C. You have a strong desire to be right. 2. Planning trader. Again, this type of trader has an excellent chance of success. Your major challenges are the desire for excitement and the need to be right. You easily could become bored with trading and do things to lessen the boredom and thus limit your profits. 3. Detailed trader. The detailed trader has a good chance of success. Your major challenge is that you could be so into the details of what you are doing that you miss the big picture. 4. Administrative trader. An administrative trader also has a good chance of success. Your major challenge is that you may be overly critical of yourself while not recognizing mistakes that are right in front of your eyes. Furthermore, under stress you may question your commitment to trading because you don't find it satisfying. 5. Facilitative trader. This type of trader has an above-average chance of success. Your major challenge is that you could have a problem with logic and ideas because you are always finding something new. Furthermore, you may need external confirmation of your ideas, beliefs, and systems. 6. Innovative trader. This type of trader has an above-average chance of success. Your major challenges are that you probably want external confirmation for everything you do, and you have a strong need for a mentor. Furthermore, you may tend to abandon a good system prematurely if it goes against you because of your emotional reactions. 7. Values-driven trader. This type of trader has an above-average chance of success in trading. Your major challenge is that you must do things your way. In addition, discipline, follow-through, and attention to detail will always be problems for you. You also may find trading boring and do things to fulfill your need for excitement. 8. Independent trader. This type of trader has a good chance for success if he or she applies himself or herself. Your major challenge is that you are driven by logic and could easily reject systems that work well because you don't understand them logically. Furthermore, your trading could dominate your time and leave you socially isolated. That said, you have a good chance of success if you apply yourself. The remaining 7 types have a much more difficult time becoming successful in the trading arena. 9. Socially responsible trader. 10. Spontaneous trader. 11. Supporting trader. 12. Accurate trader. 13. Artistic trader. 14. Fun-loving trader. 15. Adventurous trader. If you are in one of these last 7 categories, you will have to work harder and make a stronger commitment to becoming a great trader. But it's still possible. Commitment. My job as a coach is to find talented people and make sure they learn and follow the fundamentals. But what is a talented trader? What do I look for in people before I coach them? One of the first qualities I look for is commitment. Most people come into trading having accumulated a lot of money in another profession. We see a lot of doctors, lawyers, engineers, information technology, IT professionals, and the like. All those professions require a lot of training to master the skills involved. You cannot walk into a hospital with no training and say, "I'd like to do some brain surgery today." Instead, it requires 16 years of basic education, 4 years of medical school, several years of serving as an intern, and several more years of completing a residency. It requires a lot of dedication and commitment to begin to practice as a doctor. Let's look at trading. What is the entry price for trading? Perhaps you watch a show on television in which some guru tells you what stocks he or she likes. You then open up a brokerage account by filling out an online form and depositing some money. Then you can buy stocks and wait for your profits. Entry into trading is that easy. It's designed to be that easy so that other people can take your money in fees and commissions. People who trade with that little preparation will have the same kind of results that an off-the-street brain surgeon might have. The patient dies. In the case of the off-the-street trader, your account dies. Earlier, I covered some of the elements of successful trading. 1. Doing what's required on a daily basis and going through the trading process. 2. Having a strong enough money mindset to have sufficient funds to trade with. 3. Having a business plan to guide your trading. 4. Having a good system, or perhaps 2 or 3 good systems. 5. Having proper position sizing strategies in place. 6. Avoiding mistakes. Behind all of those elements is the key to everything: your personal psychology. Working extensively in these 6 areas requires immense commitment, the same commitment level that is required to become a brain surgeon. That makes sense. Great traders make a lot of money. But to be great traders, people have to be willing to do what it takes to become successful. This requires that you have a goal in mind and an intense desire to reach that goal so that you'll do whatever it takes to get there. This is the essence of commitment. Most people don't realize that commitment and hard work are necessary for trading success because those are not required to start trading. Although I can teach people what's important, I cannot give them the commitment to do it, and potential traders must have an intense commitment to work through the elements of successful trading. What is it like if you lack commitment? Imagine someone who is driving around and has nowhere in particular to go. We'll call him Henry. Henry stops at a fast food restaurant and orders a sandwich. The sandwich turns out to be the worst one he's ever had. It's been burned and dropped, and the sauce on it is spoiled. As a result, Henry complains and then talks to the other restaurant patrons about the food. The manager is not very happy and kicks Henry out. Now Henry is infuriated and starts a campaign through the local newspaper to have the restaurant closed. This goes on for weeks, but Henry is willing to spend the time because he doesn't have anything else to do. When people are not committed to anything in particular, they run into distractions. Henry had no place to go, no motivating force behind him, so he just attached himself to a bad-tasting sandwich, and his campaign against the restaurant took up a lot of his time. When you are going from point A to point B and are not committed to reaching point B, you tend to do a dance with any obstacle you run into, instead of just moving around it. If you aren't committed, you tend to do a dance with any obstacle you encounter. Now imagine someone who has an important appointment that she must reach within the next 3 hours. We'll call her Katie. Katie still has a 2.5-hour drive to make the appointment. However, she stops at the same restaurant where Henry stopped, and she gets the same bad sandwich. Does the sandwich suddenly consume her? No. Katie may complain and throw it away, but then she moves on because she is committed to something else. She either stops at another restaurant to buy something to go, or she skips lunch. To a committed person like Katie, the most important thing is the destination. She doesn't do a dance with any of the distractions she encounters. In my experience, people who are not committed to becoming a great trader find numerous distractions that take up most of their time. They complain that they are too busy to do what it takes to be successful as a trader, even though most of their time is preoccupied only with distractions. When you are committed to becoming a great trader, you do whatever it takes, and little things don't throw you off track. When distractions arise, you go around them and focus on your goal. That's the power of commitment, and it is essential for trading success. A football coach looks for talented players who have the commitment to follow the fundamentals and do what it takes to be the best. You may be the most talented athlete ever, but if you don't have the commitment to be the best, the coach probably will drop you from the team. I find myself doing exactly the same thing with traders. I look for talented people with a lot of commitment because they are the ones who will be successful. What is your commitment to trading excellence? Read over the elements of successful trading that were given earlier. How committed are you to achieving them? This is the real entry requirement for trading success. To illustrate my point, here are a couple of letters that I've gotten and my responses to them. Dear Dr. Tharp, what's a reasonable goal for me as a trader? Can I make a living trading? Can I make millions trading? Is that reasonable for a former professional? I'm aged 46 and I'd like to move into full-time trading. I've accumulated about $200,000 in cash. What is possible for me given my age and goal to become a full-time trader? Sincerely, ER. Dear ER. Your trading goal is up to you. You can certainly become a full-time trader. That is probably possible within a year to 18 months. You can certainly take $1 million out of the market, and you could reach the stage where you take $1 million out of the market each year. It depends on what you are willing to do. However, there are a number of questions that you will need to ask yourself, because each scenario has a different answer. How much do you love trading? How committed are you to being a full-time trader making millions? Are you willing to work 12 to 16 hours a day, 6 days per week, for the next 5 years? Are you willing to use at least 4 to 6 of those hours a day to start your own trading business? Are you willing to spend another 1 or 2 hours a day developing probably the most valuable skill you could ever have, self-knowledge? Are you willing to give up most of your free time, at least until your trading business is off and running soundly? And are you willing to think about trading when your family is still enjoying the things that you used to do together? Will you do whatever it takes to become the best, including discipline and accepting full responsibility for your results? You will need to start by spending at least the first 6 months really working on yourself, looking at all your psychological patterns, and developing ways to overcome any personal obstacles. In addition, you will need another 4 to 6 months to develop a business plan that will be the basis of your trading business. Most people don't treat trading like a business, and most businesses fail because people don't plan. Are you willing to learn a new way of thinking about the markets? This means thinking in terms of a reward-to-risk ratio, understanding that risk is what you lose when you lose in a trade, and understanding that your position sizing strategy is the core of how you'll work to meet your profit targets. Most of what you have learned about the markets needs to be turned upside down, examined, and then thrown out as garbage. Can you handle that? Will you be able to develop at least 3 trading systems that fit the big picture? Are you willing to work on these systems enough that they become great systems? I mention all this because all these things are required if you are serious about being a top trader who earns a lot of money in this field. I have made the study of top traders my vocation, and I have written books on all these subjects for years. It's all up to you. Are you willing to do the necessary work, or is the goal too lofty? Van Tharp. Dear Dr. Tharp, I'm just an average investor. Tell me how to make a lot of money, but make it easy and not complicated. I don't have the time, and I'm an average investor. Thanks, RM. Dear RM. What you don't seem to understand is that trading is a profession. If you are a doctor, you spent years of study learning to practice your profession well. You can't just walk in off the street and perform brain surgery, even if you've read a textbook about it. Similarly, if you are an engineer, you also spent years learning your profession. You can't just start building a bridge without the proper training. If you did not have the training, the bridge probably would fall apart. So when you tell me you are an average investor, you are telling me that you have no training and that you don't plan to spend the time getting the training. That means you'll probably get average results, and average investors generally lose money. Van Tharp, do what you love. I have a pretty good taste in art, I think. I can go into most art galleries and find the painting I like best, and it is usually one of the most expensive pieces in the gallery. I can do that for all types of art except abstract art, which I don't understand. With that introduction, I'd like to mention that I've watched my wife study art and go from being a beginning artist to a fantastic artist in a period of about 5 to 10 years. Many of her pieces might now be the type of work that I'd gravitate to in a gallery. Here are a couple of examples. The first one is an abstract piece that she painted for our office. The second one is a piece that she modeled after a French artist whose work we both admired. I personally think it is as good as the work of the French artist whose style she copied. This one is entitled Fearless. My point is not to tell you how good she has become, but to tell you what she did to get that good. I think her movement from amateur to master occurred as a result of 3 things she did. First, she went to an avatar workshop in Ireland. She didn't think that she got that much from the workshop, but her painting took a leap forward afterward. She said that somehow it freed her creativity. She wasn't worried about the results. Instead, she just started to express herself. The second thing she did was to start a self-improvement program in a book called The Artist's Way 5 by Julia Cameron. As she worked through the program, I noticed that her art was getting better and better. At this point, what I noticed was that she really loved her work. She also completed the 28-day transformational meditation course that the Van Tharp Institute sponsors for all of our super traders go through as well. In the course, she found her passion and commitment. Not long after taking that course, she won first place in a local art contest, in which numerous professional artists were participating. So what does her transformation have to do with trading and success? The path she followed is one typical way to find success. People who have done well in one area start some sort of program in self-improvement. Then, they move to a new area that they love, and as they commit to it because they love it, all sorts of things happen to make it work for them. One day, as she was going through her program, my wife said, "No one has more self-sabotage than me." I was delighted to hear her say that, because when people begin to think like that, I know they've come a long way in their self-work program. In fact, just her saying it told me that she was way ahead of most people, who are so numb to their self-sabotage that they are not even aware of it. Most of my super traders spend at least 6 months or even a year doing psychological work. When they realize how much self-sabotage they have and decide to move through it, I know they'll make it. I don't expect people to clear out all their major issues involving self-sabotage, but once they've transformed on at least 5 major issues and know that they are different as a result, I feel confident that they can move around any other obstacles that come into their pathway. Personal responsibility. It's time to talk about the most important trait that any trader can have: personal responsibility. Why is personal responsibility so important? One of my beliefs is that you are the most important factor in your trading. It's not your system, because you both produce and execute your system. It's not your position sizing strategies, because you must execute the proper position sizing algorithm to produce your results to meet your objectives. And it's not the market, because you don't really trade the market. You trade your beliefs about the market. You produce the results you get as a trader. When you understand that, you realize that you must make changes if you want more effective results. You must produce the changes. At some of my workshops, I play the simulated trading game that I mentioned earlier. and we use a bag of marbles. Everyone playing the game gets the same trade results, so the only real decision is how much to risk. Thus, it's really a game about position sizing methods. The objective is to win a big prize by having the most money at the end of the game. In fact, since everyone gets the same trades, the only two factors operating in the game are position sizing strategies, deciding how much, and personal psychology. The trading system the game simulates has a positive expectancy. That is, it makes money. Even so, if I have 100 people playing the game with the objective to win, I'll typically see a third of the room go bankrupt, another third of the room lose money, and the remaining third make very nice profits. I usually ask audience members to pull out marbles from the bag. Each marble's color represents a trade result in R multiple terms, so the activity simulates trading a system, and you never know what results you will get, but you know something about the kinds of overall results to expect. In addition, if someone pulls out a loser, I ask the same person to keep pulling marbles, that is, trades, until he or she gets a winner. That means that if there is a long losing streak, and there usually is, it will be associated with the person who pulled the marbles out of the bag for that streak. After a long losing streak, I point to the person who pulled out the losing streak marbles and ask the audience, "How many of you think you went bankrupt because of Bill?" Amazingly, quite a few of the bankrupt people raised their hands. The problem with that assumption is that nearly every simulated trading game will have a long losing streak. It's designed that way. And that streak always will be associated with the person who pulled it. Thus, if you believe someone else was responsible for your losses, you'll probably make the same mistake over and over. You'll go bankrupt in many games, and it will always be Bill's fault. If someone doesn't want to be responsible for his or her results, there are many possible responses to the question, "Why did you lose money in the game?" It was the fault of the guy who pulled all the losing marbles, trades. This is a stupid game, and it doesn't reflect real trading. It's random chance and has nothing to do with me. I didn't have a good system. I'm a stupid idiot. All of those responses are excuses, and none of them will help you improve. There is only one response that will help you improve. I risked too much money on a number of the trades because my position sizing strategy was inadequate. That's why I lost money or went bankrupt. When you understand that, you can fix the problem. When you give any of the other excuses, you just compound the problem and will repeat those mistakes. Now, are you beginning to understand why taking personal responsibility for your trading is so important? When you look at your trading results and say, "I created those results," you are in charge of the process. If you don't like the results, you can start to look for the mistakes you made. When you find the key mistakes that actually produced your results, you can make changes and get better results. That is why personal responsibility is so important, and why I look for it in all of my super traders. Do you like the results you produced as a trader in the last 12 months? If not, what mistakes did you make, and how can you correct them? Ask yourself the following. Do I have a business plan to guide my trading? Do I have a worst-case contingency plan? Do I have several positive expectancy systems that are well tested that I can trade in this market climate? Do I have something else that will work if the market type changes? Do I even pay attention to the type of market we are having? Do I regularly work on myself as the core of my trading results? If you answered no to any of those questions, you have some real clues about why your results in the past have been undesirable. These, by the way, are only a few of the questions you could ask yourself. What are your excuses? By now, you should have many ideas about how to improve your trading. There is probably no good reason not to spend a month or 6 months developing a good plan to work on yourself and implementing many of these ideas. What is stopping you? Take some time and write down your excuses. Do some of those excuses and justifications look like the following? I just don't have the time. If I do it, I'll probably miss something and just lose more money. This material isn't for me. When I bought it, I was looking for something simple. I didn't think there would be so much work involved. Dr. Tharp really doesn't understand me. If he did, this material would be easier. My life is going fine. I don't have any problems, and I just don't need to deal with all this stuff. Working on me is scary. I have too many distractions and cannot focus. I'm right, and Dr. Tharp just doesn't get it. I need to really study this stuff, and I just can't seem to find the time. It would be much easier if my spouse understood this and how important it is. When you make excuses of this nature, you do it simply so that you can be right. You are basically saying that you like certain beliefs because they are right. Being right doesn't make you happy. It doesn't make you successful. However, you do get to be right, and if that is what's important to you, then so be it. What are your excuses? Rather than evaluating if you are right about some belief that you hold, you could apply a different strategy. Ask yourself, is it useful? Is it getting me what I want? Is it working? One of the basic presuppositions of NLP is that if a person is not getting the results he or she wants, the person should do something else. Doing almost anything else will produce different results. If your trading isn't working, change what you are doing. If your trading system isn't working, change how you approach the system. Focus on your exits and your position sizing strategy. If your life isn't working, change the way you approach your life. Ask yourself whatever it is you are facing. Is it working or is it not working? Life is a process. There is no success or failure, only feedback. You've been getting feedback about what you've been doing for a long time. Are you willing to change now? It's never too late. You're never too old. Today is always the first day of the rest of your life, so begin now. Imagine that you are responsible for everything that has happened to you up to now in your life. Didn't we just discuss that topic? When you finally decide you are responsible for your own life, for what has happened in the past, you will find that you get an immense rush of freedom. You can decide right now what you want, and you are in charge of making it happen. Empower yourself. Traders can tap in to one of three general attitudes when they approach the market. The first attitude is one of pessimism, the second is one of randomness and/or neutrality, and the third is one of empowerment. The first attitude never works, the second attitude seldom brings much success, but the third attitude, when properly employed, guarantees success. Let's imagine that you have the immense power to create the results you want from your trading activity. A good reason to make this assumption is that you do have such power. We've been talking about it. Now, if you had such power, what do you think would happen if you approached your trading from a viewpoint of pessimism? You would lose money. Regardless of the quality of your system, you would consciously or unconsciously figure out a way to lose money. If you approach the market with neutrality, and you have this power to create your life, the best you can do is perform at an average level. You certainly won't add any personal energy to the market, and I suspect that your performance will be substandard. Let's look at the third option, approaching trading with an attitude of empowerment. In my modeling work with traders, I've observed that all good traders know they will win at the end of the year. I might take that one step further and say that great traders know they probably will win at the end of the month or week. What does that imply? It implies a great deal of faith. You must believe in yourself and in your trading. You must know deep in your heart that you have won and feel grateful for your success. Faith is like a magic power that propels you to greatness. For example, let's take a look at a few Bible quotes. Let it be to you according to your faith. Matthew chapter 9 verse 29. If there is faith in you even as a grain of mustard seed, you will say to this mountain, move away from here, and it will move away, and nothing would prevail over you. Matthew chapter 17 verse 20. If you can believe, everything is possible to him who believes. Mark chapter 9 verse 23. Whoever should say to this mountain, be moved and fall into the sea, and does not doubt in his heart, but believes that what he says will be done, it will be done to him. Mark chapter 11 verse 23. Therefore I say to you, anything you pray for and ask, believe that you will receive it, and it will be done for you. Mark chapter 11 verse 24. Incidentally, I used to avoid using a lot of spiritual references, because I found that many people's beliefs about spirituality were both very strong, the essence of who they were, and very narrow. If you went beyond their boundaries, you entered dangerous territory. However, my objective is to help people change, and I've found that the most powerful change is at the spiritual level. Thus, it is time to begin to open up the spiritual basis of trading. When you have faith, you take personal responsibility, even if it amounts to God acting through you, to another level. When you operate at that level, you are definitely a peak performer. Write down your beliefs. Earlier, I talked about doing an honest self-appraisal. What does that mean? Let's go deeper into yourself and the way you create your trading results. Let's look at a couple of the simple steps that are involved in peak performance trading. I've developed a procedure to help traders reach peak performance called the Trader Reinvention Paradigm. Point 6. Part of this paradigm involves setting a goal for yourself that stretches you and puts you outside your comfort zone. Then the paradigm shift helps you make the commitment to achieving your goal. Going for such an impossible goal will stretch the beliefs that limit you, and you will have to think continually about how to produce the result. To reach your goal requires regular focus on your progress toward the goal and asking the questions: How can I do something different and move closer to my committed goal? And how did I produce that result? This process has produced many positive results for people who had previously believed their goals were unattainable. What would happen if you could just pay attention to markets? No one does. That may sound surprising to many of you, but what you really trade are your beliefs about the market. Furthermore, your ability to trade is tempered by your beliefs about yourself. I'd like you to do an exercise. Write down your beliefs about yourself. Those beliefs typically start in the following ways. I am, I feel, I experience myself as. If this sort of exercise is new to you, when you first do it, you'll probably write down a bunch of your positive attributes. Furthermore, you'll probably have trouble writing down more than 20 or 30 of those beliefs, but you actually have hundreds. Let's say you think for about 5 minutes and come up with the following items. I am a fairly good trader. I feel positive about my potential. I like myself. I am fairly astute in thinking about the markets. I am intelligent. I am creative. You know there are a lot more, but after 15 to 20 minutes of thought, that's all you can come up with. Okay, that's a start, but now I'd like you to continue the exercise each time you make a trade, either opening a position or closing it. Let's say it's Monday morning and you open 4 positions in the market. After doing so, you continue to assess yourself and notice your thoughts. I feel really excited. I like fast-moving stocks. Okay, you are gaining more insights about yourself. By mid-afternoon, the market is in a steep decline, and 3 of your stocks are down $500 on the day. Notice your thoughts. I'm angry about those positions. I just got in, and they're going against me. I'm not going to let them take advantage of me this time. I'll hang on until it goes back up. You've just gathered some more insights about yourself. Keep this up until you've written down 100 or more statements that reflect you and your feelings. When you do that, you'll have a lot more insight into the way you produce your trading results, and you will be on your way to becoming a peak performance trader. After you've written down 100 beliefs, examine those beliefs by asking yourself 6 questions about each one. I call this the belief examination paradigm. 1. Who gave me this belief? My parents? My peers? The media? School? Or did I select it for myself? 2. What does this belief get me into? Write down at least 5 things. 3. What does this belief get me out of? Again, write down at least 5 things. 4. How does this belief limit me? 5. Is this a belief I want to keep because it is useful? Or is it a belief I want to get rid of because it limits me? By the way, at a very deep level, all beliefs limit you in some way, but some are still useful for the level at which you now find yourself, and they are thus worth keeping. 6. If the belief is not useful, can I simply drop it for something more useful, or is there a charge, emotion, holding it in place? If you find that there is a charge, that is, an intense emotion that comes up for you when you ask these questions, holding your belief in place, you will need to release the charge to be free from the belief. We'll discuss how to do that later. Let's look at one example of a belief. Good performance comes from picking the right stocks. Let's put that belief through the belief examination paradigm, as one person might answer it. Who gave me this belief? Answer. I hear this all the time. There are lots of books about how to pick stocks. I watch experts give their picks on the Financial Channel. Everyone talks about how important it is, and so it must be true. What does this belief get me into? Answer. I spend a lot of time looking for the right stock. I listen to people who think they are good stock pickers. I read books about stock picking. Once I've picked the right stock, that's all I have to do. Just buy it and hold on to it. I question my stock picking criteria to see if I can improve them. What does this belief get me out of? Answer. I don't have to do much planning, because that has nothing to do with stock picking, and I don't have to pay attention to the market generally, because the right stock should be good all the time. I don't spend time working on myself, so it gets me out of personal responsibility. It gets me out of looking for my own mistakes if the trade failed. Instead, I can safely assume that I did a poor job of stock picking. I get to avoid working on other important aspects of trading such as exits and position sizing strategies. Can you begin to see how some of the aspects of this belief might not be that useful? I hope so. Let's move on to the next question. How does this belief limit me? Answer. It makes me think that entry and stock selection are the most important aspects of making money. If I don't do well, something is wrong with my selection criteria. Instead, I should be able to focus on myself. I should focus on the other parts of the system and whether the system is working. In addition, I need to know how the system will be able to perform in various market types, and how to position size my trades to meet my objectives. This belief causes me to ignore those things. Of course, most people would not be able to give this answer, because the belief would typically limit their knowledge of the other factors. Is this belief useful? Answer: since stock selection is one of the least important aspects of trading, this belief is probably not that useful. Can I change it? Or does it have a charge on it? Answer: I should be able to change it, but I'm afraid to drop it because I'm not convinced that those other things will make me more money than picking the right stocks. This person probably needs to release the fear. Imagine the control you'll have over your life after you've completed this exercise on 100 beliefs. What would happen if you applied it to 1,000 of your beliefs? Whether you do that will depend on how useful you believe the exercise to be, which just proves the power of your beliefs, and how committed you are to being in control of your life and your trading account. Enjoy your obstacles. Let's look at some processes you can use to work on yourself. There are many of them in later parts of this book. Find the ones that seem useful to you. You already know that a committed person with a clear goal will encounter an obstacle, refocus on the goal, and move out again toward the goal. In contrast, an uncommitted person may do a dance with the obstacle that could last a long time. In fact, most people spend their entire lives doing dances with obstacles that get in their way. In any endeavor, you have up and down periods, and dealing with the market has many such periods. To profit from the up periods, you have to tolerate or even enjoy the down periods. To enjoy the profits, you have to get through the losses. Perhaps it would be useful if you could celebrate your losses. As mentioned earlier, I'm an NLP modeler. That is, if someone does something well, I can figure out the essence of what that person is doing by understanding his or her thinking. Thus, when such a person goes from point A to point B easily and effortlessly, I can determine how he or she does it and teach that skill to other people. Some people make money through trading easily and effortlessly, and I've been studying those people for over 25 years. It turns out that one of the major problems people have in going from their current location to their desired goal is all the walls or obstacles they run into each day. There is a common solution to these obstacles: make them okay. If you enjoy bumping into the walls, it is usually easy to refocus on the goal. If you're in the market, one of the biggest obstacles you'll face is the wall of losses. It's fairly difficult dealing with the markets if you are not willing to lose. It's actually almost impossible. It's like walking but wanting to use only your left foot, avoiding your right foot. That doesn't work, and neither does trading without losses. When you want to be right, you're not dealing with the obstacles. Instead, you will try to force things. When you want to make a profit out of today's trade even though it's a big loser, you're not dealing with today's obstacle. Enjoy the obstacle, embrace it, and be willing to accept it. If the market tells you it's time to get out at a loss, do that. Good traders typically have some point in the markets at which they know they must get out of a position to preserve their capital. Taking this loss is essential. It preserves your capital, and so you should enjoy doing it. However, if you don't understand that the loss has nothing to do with being right or wrong, it's just part of the process, you could turn it into a monster by interpreting it to mean something. What then happens is that you fight each loss, and in the struggle the losses typically get bigger. For example, if you are afraid of a $500 loss and won't take it, you easily could watch it become a $1,000 loss. The $1,000 loss, when not taken, can easily become a $2,000 loss. The net result is a losing trading system. Think about it. If you have this problem with losses, you easily could turn a good trading system into a losing system. If you don't realize that it's your problem with losses, you might believe the problem is with your trading system. Or if you are following someone's advice, you might think the problem is your advisor or your money manager. Guess what? Quite often traders take the relationship they are having with the market and transmute it by developing a different system or trading with a new money manager. Now the old problem they used to have with the market of not accepting what the market gives them becomes a similar struggle they are having with their system or with the new advisor. Instead of giving up on the market after a string of losses, just in time to miss the really big move, they avoid their system until it is doing really well. When it is showing tremendous profits, they jump on board, only to be blown away by the market in short order. The same thing happens when they invest with money managers. This desire to be right motivates them to jump to the top money manager when she's hot, only to go through a big string of losses. Psychologically, if you don't come to grips with your obstacles and embrace them, You will find another way to repeat them. Realize that you find walls because they are there for you to bump into. When you accept and embrace this fact, you'll accept bumping into walls. Strangely enough, you then hardly even notice that the walls are there, and you will then be free to achieve a new level of success in the market. Good traders realize that they can have 10 to 20 losses in a row. It's part of the business of trading. It happens, so just accept it and move on. If you have trouble accepting that, you need to realize that the problem is you and deal with it. Trade through mindfulness. What would happen if you could just pay attention to what the market is doing right now? You'd be totally in the present with no preconceived ideas or biases to influence you. If you did that, your trading probably would accelerate to a new level. You can trade that way if you practice mindfulness. For example, in October 2008, a friend of mine had lost a lot of money in the markets. I told him to get out. I said that we were in a major bear market, and he should just get out until it ended. He followed my advice. The next week, the Federal Reserve lowered the discount rate. The market moved up on the news, and he called me, wanting to get back in the market. I said that when the market starts going up again, it will be obvious. Short-term reactions to news tend to be large in bear markets. However, if you just watch what is going on, it is obvious. Most people have trouble with this. They can't watch what is going on because their heads are so full of chatter. The solution is to trade through mindfulness. Mindfulness first came to my attention as a form of meditation in which you simply quiet your mind and then watch your thoughts as they come up. When a thought pops into your mind, you notice that it is there and then release it. That's all there is to the meditation, but it can have a profound impact on your life if you do it regularly. Mindfulness is also a state of being. The Harvard psychologist Ellen Langer has popularized the term through 2 books, Mindfulness and the Power of Mindful Learning. Point 7. She defines mindfulness as a state of being in which one is likely to be 1. Creating new categories, 2. Welcoming new information, 3. Looking at things from multiple perspectives, 4. Controlling the context, and 5. Putting the process before the outcome. Creating new categories. Mindfulness is the opposite of mindlessness. Mindlessness means living by your conditioning. It means assuming that all your beliefs are fixed and true, so that all you can do is find evidence to support that truth. Mindfulness, in contrast, is the continual creation of new concepts and categories with no real attachment to their truth. For example, think about your last day of trading. What was it like? You might say, I put on some long trades and some short ones. I also closed out some trades, some at a profit and some at a loss. In between, I watched the market. Even if I offered you money for everything you could list that you did yesterday with respect to trading, you still probably couldn't come up with much more than what I just listed. Yet you did so much more. You probably experienced 1,000 different emotions, which you've forgotten. You probably read 100 news items. You probably talked on the phone to some people. But unless I mention those things to you, you probably wouldn't think of them. Most strong opinions rest on global categorization. The market went up yesterday. We're in a C wave of an ABC correction. I lost money yesterday, but I followed my system. We're in an up move and a secular bear market. I should pay attention to what is going on now in the market. All those statements reflect global categories that you probably use to form your opinions. What would happen if you formed new categories of thought about the market? Think about the market in great detail. Who are the different players? What do you think each of them is doing with respect to the market? Call people you know and notice their reactions and their perspectives. Break old thinking patterns by creating new categories, and you'll step up your trading. Welcoming new information. New information continually impinges on all living creatures, and their ability to survive depends on their openness to that information. Research has shown that people undergo temporary psychological damage if they are deprived of new information for any length of time. If they are deprived of sensory input, young animals become severely impaired later in life. You need sensory information to stimulate you. Most people are exposed to new information continually, and so the lack of it is not a problem. However, most of us tend to filter, generalize, distort, or delete most of that information. Becoming more receptive to the information that is coming into you is a major step toward improving your performance as a trader. Looking at things from multiple perspectives. There are at least 3 general positions or perspectives from which information can be viewed. The first perspective, position 1, is the I position. How does this information affect me? The second perspective, position 2, is how it affects another person directly. What is that person's perspective? The second position might be that of the person who takes the opposite side of your trade, or perhaps the person who is making the market for you. Looking at new information from that person's perspective may be a valuable thing to do. The third perspective, position 3, is that of the neutral observer who is watching all the other participants. This is like someone out in space who can see what everyone else is doing and then view it all from a global perspective. These three perspectives were crucial in Einstein's thinking processes. This was part of how he formed his great ideas about relativity. Those perspectives are also the basis for some of the most powerful change work I know about. Try them on. Of course, there are many possible players for positions 1 and 2. You can try on numerous possibilities and gain tremendous insights as a result. You'll gain choice in terms of how to respond, empathy for other people, and the ability to change your behavior much more easily. One of our instructors actually developed a trading system by determining his strongest beliefs, then taking the exact opposite viewpoint. It turned out to be one of his best systems. Remember that most people have good reasons for behavior that you might consider negative. The intentions behind those behaviors are good. If you close out a trade early, are you nervous or are you cautious? If you fail to take a trade, is it because you are afraid or because you haven't totally developed and tested your plan for trading? Typically, the behaviors you most want to change are the mirror images of the qualities you value most. Thus, if you are having trouble pulling the trigger, you probably value a thoroughly tested plan and don't have one. Controlling the context. Much of your behavior is context dependent. For example, many professional traders know it is possible to lose $20,000 in a trade, perhaps paying $1,500 in trade costs in the process. However, the same traders are much less likely to pay $1,500 to attend a course that could reshape their trading and help them avoid many of those losses. The thinking behind such logic is that the loss is a cost of doing business, whereas the course is an unnecessary expense. Notice what happens to the logic if the trader switches it around and starts to think of instructional learning as being essential to doing business well. It becomes much more significant than the losing trades, especially since it may save the trader many thousands of dollars in a single year. Of course, that depends on the course the trader selects. People who practice mindfulness are aware of the context in which they are interpreting events. They are also willing to shift contexts to determine the impact on their behavior and their thinking. As a result, they give themselves much more choice and are much more likely to make money. Ask yourself the following questions. How am I interpreting my losses? What is the context in which I am viewing all my trading? How does trading fit into the scheme of things in my life? What if I shifted the context on just one of these questions? Putting the process before the outcome. People can imagine themselves taking gradual steps, but great heights seem totally forbidding. Yet when you take enough gradual steps, you'll reach great heights. If you are concerned with the final result, the outcome, you probably will have problems attaining the outcome. However, if you concentrate on the process of getting to the outcome, you are much more likely to arrive at your destination. Every outcome is preceded by a process. You will not make money trading unless you follow a predetermined plan and stick to that plan. That's why you should pat yourself on the back every day if you can honestly say that you totally followed your rules throughout the day. Every super trader arrives at that stature by taking one trade at a time. The primary difference between that person and the average trader is that the super trader probably continued to follow his or her plan every single day. The super trader probably made very few mistakes. What can you do to practice mindfulness in your trading? 1. Do a 20-minute mindfulness meditation each day for at least a week. If you practice watching your thoughts and releasing them as soon as you notice them, you can be satisfied that you are doing the exercise appropriately. 2. Keep a regular diary of what is going on in your life. Do it for a few days before you start the mindfulness meditation, and then keep it up. When you've completed a week of mindfulness meditation, look at your diary and notice how your life is different. 3. Bring mindfulness into your trading and investing by doing the following. Imagine yourself taking the other side of every trade that you actually take. What does that position feel like? Also, imagine yourself being a neutral observer who watches as you and the other person both take a position in the market. What do you think that person would think? Look for new information about each new trade. What information are you normally accepting, and what information are you normally rejecting? When you do something you don't like in your trading, notice the context in which you are interpreting not liking it. How else might you interpret that behavior? What other intention might cause that behavior? Perhaps those other intentions are something you value highly. Concentrate on the process of trading following your rules. In fact, at the end of each day, Ask yourself a simple question. Did I follow my rules? If you did, pat yourself on the back. If you don't have any rules, you obviously didn't follow them. Think about it. These exercises are powerful if you do them. If you don't do them, they are meaningless. Are you going to do them? If the answer is no, ask yourself why not. It is probably because you don't believe they will help you. If that's the case, put that belief through the belief examination paradigm I showed you earlier. Perhaps you are not committed to trading success. If that's the case, what are you committed to? What do you love to do? Mindfulness trading, an example. At a recent workshop, I took all the traders through a process designed to increase their mindfulness. One woman in attendance, who had received some Buddhist training in Vietnam, said she got in a very peaceful state that reminded her of that training. My response was, why don't you start trading in that state? So she went home and took some more training so that she could reach that state regularly, and then she started trading from it. The results were quite phenomenal. She had the following beliefs about the market. If a stock fails to make a new low after it has already made 3 or more lower lows, it will make a new high. And the opposite is also true. I will not enter a trade in the first 5 minutes after the opening bell. I will just monitor my watch list for 5-minute high/lows. Trade against the strongest stocks in the bear market due to rally and the weakest stocks in a bull market. Trade in the direction of the last daily bar. If the price is above the 200-period moving average, MA, look at 2 other short-term moving averages based on 5-minute bars. Most short-term averages would work, so let's use the 12-period MA and the 24-period MA. To go long, look for a multiple bar drop but not below the 20-period MA. Enter on a rally with just a slight uptick. Place stop at the low and target at the swing high. Do not take the trade unless there is a 3-to-1 reward-to-risk ratio. Short trades are the opposite of the long trades for these various factors. Notice that these are all just her beliefs or her filters to reality. You might not have those beliefs at all, and if you don't, you definitely could not mimic her trading. She would usually trade only one high-volume stock each day for about an hour or two. That's it. And each day she seemed to be able to take about 5 in profits from the market. Her trading was very fast, and there were multiple opportunities to make errors. In fact, her trading was so fast that she didn't have enough time to write down what she was doing. Instead, I had her dictate into a recorder exactly what she was doing. By trading through mindfulness, she made very few errors, trading at above 95% efficiency. At one of our Super Trader summits, she explained what she was doing and talked us through several examples. Everyone else was amazed that she could do what she was doing because it was so fast and the price moves were quite tight. However, subsequently, a number of other super traders were impressed enough that they were also able to adapt their various trading styles to mindfulness trading. Mindfulness trading is merely following the market and your system and avoiding extraneous thoughts and chatter. The extraneous chatter is what introduces mistakes and blocks your ability to see what the market is actually doing. But when you see what is actually happening through mindfulness, the results can be amazing. Make friends with your inner interpreter. Think about a problem you have with your trading. It could be almost any problem. Perhaps you have trouble taking profits too soon. You might get angry when a trade gets away from you. Perhaps you frequently second-guess yourself. Whatever your problem is, write it down. You can apply this exercise to almost anything you think might be a problem. Once you have identified that problem, write down several statements about it. Why do you think you have the problem? What caused it? What's your reaction to the problem? Your statements could be almost anything. Why do I keep doing that? That behavior just shows that I'm stupid. I just can't seem to control myself. The problem is really nothing, but it just seems to continually repeat itself. These statements are your interpretation of the problem. In fact, without this interpretation, you probably wouldn't have a problem. Thus, perhaps it's important to work with your inner interpreter. You need to use your imagination with this exercise. Be willing to play like a child. 1. Now that you have listed a problem and some statements about it, ask yourself how you can best explain the way the problem happened. Perhaps you've already done that with one of your statements. If you have not, that's your next statement. Write down what you hear. In addition, notice the qualities of the voice making the statement. Where do you hear the voice? Which direction does it come from? Whose voice is it? Is it your own? Is it someone else's? 2. Now find 2 more problems and repeat step 1. Make sure the problems have some emotional significance for you. 3. Look at the 3 statements you've written about how your 3 problems happened. What do they have in common? Notice how permanent and pervasive the statements are. Also notice the overall personality behind the voice. 4. Rewrite the three statements and make them more optimistic and specific to a time or occasion and to the place where they happened. Make them impersonal to separate them from your behavior. 5. Let's assume that a part of you, your inner interpreter, is responsible for these statements. Where does this part of you seem to live? Is it on one side of your head? Is it at the front of your head? Or perhaps it's coming from your heart. Notice once again where the voice seems to come from. 6. Think of this part of you as a friend that you created for a positive reason. Thank this part for helping bring you to where you are today. It's really been a friend to you, and you need to acknowledge it. 7. Once again, now that you are in communication with your inner interpreter, ask it to come up with even more positive reasons for your three experiences. 8. Move your interpreter voice to another part of your body, say, your right shoulder. Change the tone of the voice. Make it sound like a cartoon character or a famous celebrity you like. Try moving it again and giving it another new voice. Listen to that voice go over your new excuses and perhaps some more optimistic ones. 9. Notice how you feel about your interpreter now. 10. Now let your inner interpreter go where it feels best. That may be its original spot or a new place in your body. Give it the voice you find most reassuring. If you get stuck in this exercise, it is okay to make up an interpreter. In fact, you really never make up anything, or perhaps you make up everything. Either way, when you make something up, you are just bringing it up from your unconscious mind. You'll find that when you do this, you suddenly have much more control over your feelings. Your interpretations are never reality. Instead, they are just judgments, feelings, or beliefs about a particular event. They feel real because they give you an emotional response. However, emotions have nothing to do with reality. They are simply coming from you. The nice thing about such interpretations is that they are changeable. They cost nothing to change but give you tremendous benefits. It's now time to put your inner interpreter on your side. After all, it is your friend. Here's how one person, let's call him Bill, went through this exercise. When Bill thought of a problem, it was the criticism he got from his spouse whenever they talked about trading. He could hear her voice in his head, saying, "Trading is nothing but gambling. It's a waste of time and has no redeeming value." Bill wrote down some statements about the problem and came up with the following. "I married the wrong woman. She's an idiot and she just doesn't understand what I do. Her parents instilled an old work ethic in her, and trading doesn't fit that work ethic. That's why she gets upset. She wants security and doesn't feel comfortable when I tell her about trading." He noticed that the voice was kinda high-pitched and always seemed to come from the right side of his head. It seemed to be coming from an elevated position, down into his head. When he repeated the exercise with several more problems, the voice had the same qualities and came from the same place. When he tried to move the voice, he first put it in his throat and made it raspy. That didn't feel comfortable at all. However, he didn't have any problem moving it between his eyes and giving it a child's voice. That seemed very comfortable. When he made new, more optimistic interpretations of situations, he found that it was quite easy when he kept the voice in the new position. As a result, he decided to give his inner interpreter a new home. Now this part seems to appreciate him much more and gives him very few problems. Try this interpreter exercise at least once a week for the next 4 weeks. Notice what happens after you do it and keep practicing. You could be adding a very valuable tool to your life. These exercises are useful only if you do them. Decide how important they are to you, and then do them. Learn to dissociate. If you wanted to know what peak performance trading looks like, you could examine a market genius and study how that person approaches her craft. However, you also could look at a genius in some other area and notice if some of his behavior could be applied to trading. In that regard, I've been thinking about how Einstein would think about the modern markets. I learned that one of the things Einstein did well was to dissociate. He used imagery to step out of his body and assume another perspective. Try this exercise for yourself. During each part of the imaginary adventure that follows, notice what your thoughts are and what your experience is like. Here is the first imaginary scene. See yourself, your whole body, on a movie screen skydiving. See yourself in the airplane with the parachute attached. Now see yourself getting ready to jump. After you jump, see yourself free-falling for about 10 seconds, and then you pull the ripcord. Notice what happens when you pull the ripcord. It's as if the parachute were pulling you up in the air. Now watch yourself gently floating down to the ground. That's called being dissociated. Repeat the same scenario, but this time, see it out of your own eyes. Imagine that you are actually in the plane prior to the jump. Notice your hands and feet as you are sitting in the plane getting ready to jump. Now move over to the door, get yourself ready, and then jump. Notice yourself moving rapidly away from the plane as you freefall. After about 10 seconds, see your hand as you pull the ripcord, and notice what the experience of your parachute opening is like. Now feel yourself floating gently down to the ground. That is called being associated. Note that the scene was the same for both experiences. You were jumping out of an airplane, yet the images, both of which were imagined, were quite different. We live most of our lives in an associated state. As a result, everything seems real. Our feelings seem real. Our beliefs seem like reality. Yet that is the case simply because we seem to be part of it. What we are thinking seems to be all there is. As soon as you assume another position dissociated, your experience changes dramatically. Your thoughts are different. Your experiences are different. Yet is this second experience any more or less real? It's neither one. It's just another experience. This quality of assuming other perspectives, especially this dissociated perspective, is common to many great people in many fields. Einstein is just one example. Great quarterbacks have claimed to have the perspective of being above the entire football field, even while they are playing, so that they can see the entire field in a detached manner. Imagine the perspective that would bring for anyone who could do it. Michael Jordan has claimed to be able to imagine floating over the basketball court and from that perspective seeing everything that is going on. Perhaps that explains why he seems to know where everyone is. Again, think of the advantage such a skill would give you. I did 2 interviews with the former fund manager Tom Basso. Jack Schwager interviewed him in the Newmarket Wizards and gave him the nickname Mr. Serenity. 8. In my interview with Tom, he revealed that his ability to dissociate was one of the secrets of his success. Here's a little of what he said. In situations in which I felt I needed improvement, or in which I wanted to improve my interactions with other people, I would just play key events back in my head, figuring out how others had handled the situation. I've always thought of it as some Tom Basso. Up in the corner of the room watching Tom Basso here talking to you in this room. The funny thing about this secondary observer was that as time went on, I found the observer showing up a lot more. It wasn't just at the end of the day anymore. As I got into stressful situations, as I started trading, doing more interacting with a lot of people, getting our business off the ground, dealing with clients and so on, I found that this observer was there to help me through it. If I felt awkward or uneasy, then I was able to watch myself do it. Now I have this observer there all the time. Excerpt. Course Update 9, December 1990. A fundamental presupposition of NLP is that if one person can do something, everyone else can do it too. Since being able to move to another perceptual position is one of the critical aspects of genius and greatness, it's important to start practicing it. Here's an exercise. At the end of the day, replay the day in your mind, especially critical junctures in the day. Do it from a disassociated point of view, in that you watch yourself going through the day. Once you've completed the exercise, write down what you notice about yourself. How can you apply this to your trading? Here is a simple exercise for when you feel that you are not trading well. Simply stand up and walk away. Move to a different part of the room and observe yourself. Notice what you look like sitting there in the state you were in. What did you do with your body? How did you hold yourself? What did your face look like? What was your breathing like? After you've observed all those things, notice how you feel now. You are no longer in that body. Instead, you are watching yourself from a dissociated perspective. All the feelings and emotions should be gone. If they are not, make sure you are watching yourself. Now ask yourself some questions. What resources do I need to be able to handle this situation like a super trader? Do I need confidence? Do I need the courage to get out? Do I need some perspective? How would I look if I had those resources? Imagine yourself in the same situation with those new resources. See yourself sitting there full of those resources. And notice how different the situation is when you bring those resources to the table. Chances are that things are quite different. Now we'll find out the real application of this exercise. Go back to the situation and become what you were just imagining. What is that like? Chances are that it's an entirely different perspective on the situation, and chances are that you are performing at a totally different level. That's the power of dissociation. Practice this technique at least once a day for the next week. The more you do it, the easier it will become. Achieve balance in your trading/investing. Achieving balance certainly would rank as one of my top 10 tips to you. First, we'll talk about balance between profits and losses. If you can understand that portion of it, it will be easier to understand the importance of balance in other areas. Achieve balance in your trading. We live in a world of polarities. Good, bad, up, down, young, old, happy, sad. The win versus lose polarity is just one example among many. In most cases, we tend to judge the polarity in that we prefer one side and dislike the other side. However, one of the secrets to life is to make both sides of the polarity okay. What does that mean? This is hard for most people to understand, but perhaps it will be easier when I explain it in terms of profits and losses. You cannot be a successful trader if you are not willing to have both profits and losses. Both are a significant part of the trading process. Most people don't understand this concept. They want to be right all the time. They want to make money on every trade. Yet that will not happen because losses are a part of the trading/investing process. When you understand this relationship, you can come to terms with losses and make them okay. A natural part of the trading process is to have a point at which you must unload a position or trade at a loss to preserve your capital. It's your initial risk, what we call a 1R loss, where R stands for your risk amount. Those losses happen to most people about half the time or more, and you must make them okay or neutral. If a loss is not okay, you will not take it now. When you're not willing to take a loss, it usually gets a little bigger. When it rains, it pours. As a result, it becomes even harder to take, much more painful. If you didn't take the loss initially, as it becomes bigger, you will be even less likely to take it. What's going to happen? It probably will become even bigger. The cycle typically continues until the loss becomes so big that you have to take it. This typically occurs when you get a margin call from your broker. However, investors may never get a margin call if they are not margined. Instead, they tie up valuable capital in a falling investment that may last forever. There are probably millions of investors right now who are hanging on to investments that have been down since their highs in the year 2000 because they are waiting for the market to come back. As you can see, you must make it okay to take losses. The other half of the equation is also important and is equally puzzling. You can't put too much importance on gains. People who value profits too highly tend to take them quickly. Why? Because if they don't take them, they are afraid the profits will get away from them. A client pointed out an example to me in the case of a group of real estate investors. These investors got into a real estate deal that started to lose money. Instead of getting out and taking their loss, they elected to stay in and ride it way down. When asked why they didn't get out of a bad investment, their comment was, "We haven't gotten our money back yet." The same investors subsequently got into another real estate deal. It started to become profitable very quickly. In fact, it rose to 100% profit and more. However, the investors who held on to the bad investment now sold out quickly at a small profit. When they were asked why they sold it so quickly, the reason was, "We lost money on the other deal, so we wanted to make sure we got our money back on this one." This concept of balance is very important and applies to any polarity you can think of, not just profits and losses. Overcome a stuck state of mind. When you are marching toward a goal such as trading excellence, you may do so by overcoming obstacles. When your focus is on problems you have, such as lack of funds, limited resources, or limited knowledge, you probably are going to generate feelings of guilt, anger, or frustration in yourself. Little is accomplished with such mental states. You feel stuck, and your orientation towards stuckness tends to persist. Are you stuck? Whatever you cannot accomplish in life is a model of a stuck state. Early in life, when you tried to accomplish something, you probably were attacked by some sort of unforgiving failure. The problem was not so much the failure as the intensity of the attack. That event planted a psychological stop sign in front of you whenever you started in certain directions. That psychological stop sign has an impact that is as strong as the original bashing. It creates internal conflict when you attempt to accomplish certain things, with part of you wanting to go on and part of you wanting to retreat. You oscillate back and forth, producing a stuck state of mind. When people are stuck, you can see the oscillation in their bodies. Typically, they see two pictures. With the first blink, they see what they want, and with the second blink, they see their psychological stop sign. You can observe this in sales professionals, for example. The salesperson wants to make the sale, yet she hates rejection. She decides, "I can do this, but I don't have a worthwhile product." Or, "My product is good, but people just don't respond to me." Or, "People will personally reject me." The result is usually the stuck state of procrastination. The same thing goes for a trader. One part of the trader says, "Get out of the trade. It has hit your exit point, and you need to cut your losses." Another part says, "Stay in the trade. It'll turn around, and you don't want to take a loss now." Usually the result is a stuck state. I've seen hundreds of people in stuck states. One state that was particularly striking involved a man in his 40s who still lived with his parents. He wanted to go out on his own, but something held him in place, keeping him dependent on his parents. When I saw him, he had decided that trading was a way he could earn money to escape. However, he'd become stuck because earning enough money to escape would result in an extreme negative state. As a result, he found he could not pull the trigger. Every time we put something off, some dream or goal, we start to oscillate. We want to achieve the dream or goal, but we also want to avoid the pain that it takes to accomplish the task. The result is emotion, a lack of motion outside us, and a clearly noticeable motion, emotion, inside. Some simple solutions. When you are stuck, the more effort you put into trying to unstick yourself, the worse off you become. It's a little like being stuck in quicksand. The more you struggle, the more quickly you sink. The first solution is always to relax and move slightly in the direction that is opposite to what your instincts tell you. For example, a pilot going into a nosedive must push gently into the dive to get air flowing under the wings properly. Only after he has done that can he begin to control the airplane. Similarly, when you start to skid in your car, you must steer into the skid until you gain control over the car, although your natural reaction is to do the opposite. If you are stuck in your goal of becoming an excellent trader, try doing the opposite of your instincts. If you must take a trade, make it okay to not take the trade. Instead, move toward working on your emotions. The second solution is to focus on what you want. When you focus on limitations, you feel the emotions of the stop sign or the limitation. When you focus on what you want to achieve, you begin to see possibilities and new resources that open you up. What is your focus? The third solution is to focus on being what you want to be. If you want to be a great trader, don't focus on what great traders have or do. Focus on their state of being. What is it like to be a great trader? What is it like to step into their shoes? I do an exercise in a workshop in which I ask students to step out of a stuck state to notice what they look like. This dissociates the person and takes her out of the stuck state. I then ask her to imagine a great trader in the same situation. What would that trader look like? What would she be like? I then ask her to step into the beingness of the great trader. The result is almost instant transformation. Try it. Does failure motivate you? I once read a wonderful book by Jerry Stocking, titled Laughing with God, Point 9. In that book, the following dilemma is brought up, and I'm going to rewrite the conversation a little to make it pertinent to trading/investing. God: do you want to win without losing? Trader: of course. God: if you win, you must lose as well. But you weren't honest with me. You said that you'd like to just win. If that were the case, you'd win much more often. The possibility of failure motivates you much more than the possibility of success. Your whole society thrives on failure, or at least the fear of losing. If there were not the possibility of losing, you could not take any credit for success. Making money in the markets would seem meaningless for you. Think about it. What if you had recorded a sporting event but someone told you the final score? Would you still watch it? Probably not, because it's the uncertainty of the outcome that keeps your attention. You could make money on every trade, but that wouldn't be fun. You'd lose the uncertainty you love, and yet pretend to eliminate. The last statement may get to some of you. But what if it's true? Ed Seykota said in Market Wizards that people get what they want out of the market: excitement, punishment, and a justification for their emotions. I've certainly seen plenty of evidence to suggest that his observation is true. But the conversation gets even more interesting. God: you know what will happen in the market because the future is an illusion you invent. Ignoring what you know at the soul level proves how much you love uncertainty. You use the illusion of the future to keep yourself locked in time. To make this conversation more meaningful, imagine that you are 100% accurate on every trade. You know every top and every bottom on every stock. You are never wrong about a trade. Suppose you just entered the market and made $10 billion in a year. Would you keep going if it were that easy? Would $10 billion be enough? Would you keep trading? Perhaps your response is, sure I would. I'd get all the money in the world. Would that be interesting? I tend to doubt it. Trading is interesting only because of the possibility of losing. You are now in a position where you can buy anything or do anything because you will never lose money on a trade. Would you still trade? Why or why not? Everything in this section may be made up. Nothing may be true, but I'd like you to assume, act as if, it is true. Just pretend that it's true. When you do so, what happens to you inside? How do you feel about trading? Would you keep on trading? If so, how often? If not, why not? What does that tell you about yourself? Is it the uncertainty that keeps you in the game? Would you keep trading if you had all the money in the world? Why? What do your answers tell you about yourself? I encourage you to do this exercise and notice what comes up for you. How many trades would you take if you had no uncertainty about the outcome? What do your answers tell you about yourself? A note for your consideration. There are many books that claim that the text came from God. I don't know whether such books actually come from God, but if they give me new ideas to ponder, I find them very exciting. If it stretches your beliefs to think something came from God, then assume that someone made it up, but at the same time imagine that it might be true. Laughing with God gave me a lot of new ideas, and if you open yourself enough to do the same thing, you might find the ideas quite expansive. Also notice if there were any buttons pushed by this exercise. If there were, ask yourself, what's the belief behind my buttons getting pushed? When you find the belief, go through the belief examination paradigm with it. If you actually do the exercise, you'll find that the belief is limiting you. The key question now is, what is the charge behind the belief? When you get rid of that charge, your whole life will change. No requirements to be happy. Imagine that you are infinitely wealthy. That means that if you stopped working today, your passive income would be enough to live on for the rest of your life with your current lifestyle. What would you do? Would you continue to do the same work? Would you work to earn more passive income so that you could improve your lifestyle? Suppose you did that and your lifestyle became 10 times as affluent as it is now. Then what would you do? More of the same? Perhaps you'd work to give to others or to charity. Would you be happier if you were 10 times more affluent? Are you sure? Once again, let's look at the book by Jerry Stocking, titled Laughing with God. As I've said, I have no idea whether God was involved in writing the material. However, the statements made are quite useful and stimulating. And that's enough for me. In that book, God says, if you cannot be perfectly content with nothing, you obviously cannot be content with anything. Take joy in the simple things. Although this might sound satirical to some of you, remember what we said before about having, doing, and being. Most people want to have what the good trader has, the money and success. Some are actually willing to do what the good trader does, taking a bigger step in the right direction. However, the real secret is to be the good trader. If you want to be happy or content or satisfied with your trading success, you have to be able to step into those states first. Thus, the statement from God is perfectly logical. If you cannot be happy with nothing, that is, if you cannot just be happy, you'll have trouble being happy as a result of some sort of doing or some sort of having. God goes on to say, the moment you focus on anything that you did not have at birth, you are deciding that you are somehow incomplete and can be fulfilled from outside of yourself. Later he says, I put you in paradise, but you don't realize it, and you are attempting to improve on it. This sort of approach does not work for the reasons I've just described. God also says that our priorities are backward. That's probably nothing new and is easy to see in other people, although it's not always as easy to see in oneself. We tend to value what is rare. The less people have of something, the more valuable it tends to become. In contrast, God suggests that everything worth having is available in abundance. Everything we need is available in the proportion that we need it. Things such as air, water, light, sunshine, and beauty. The most abundant thing we have is uncertainty, and we talked about how important it is in the last section. The markets would not be any fun if all that existed was certainty. In fact, most people would stop playing. Perhaps I should have put the word playing in italics, because playing is what children do that gives them joy. As adults, we're taught to take life seriously and stop the joy. Children take joy in the simplest things. Walking through the woods, taking a deep breath of fresh air, being with someone who is fun, seeing a sunset, splashing in the rain. Adults tend to ignore all that wonderment. Instead, we work for money, security, and an improved lifestyle. A long time ago, I had a major goal to accumulate enough money to pay off my house. At that point, I felt I wouldn't have to work anymore. I knew I still would work, but it would be nice to be in a position in which I didn't have to. About 10 years ago, I fully began to understand the concept of infinite wealth as I explained it earlier. My passive income had to be greater than my expenses for me to be infinitely wealthy. Within 6 months, I had become infinitely wealthy. Was I still doing the same things? Yes. Did I feel any different? Not really, except to the extent that I changed a lot about who I was being in order to become infinitely wealthy. In Laughing with God, God says, "You have set up a world of unattainable goals, having the most, or being the best. Those who come close will readily admit that there is nothing there worth attaining." Here is an example of this logic that is worth thinking about. You have a brand new $250,000 car, and your neighbors do not have such a car. As a result, you must be more important than they are, right? You must be good, successful, and important. Yet you don't spend much time joyriding in your $250,000 car because you don't want it to get dirty or damaged. Mostly you just drive it a little to show people how important you are. One day you decide to get in your car and take it for a long drive. You plan to drive 500 miles to a different state. However, when you're driving your expensive new car, you notice that you are tense and upset. Other drivers bother you. High-speed driving makes you tense. During the trip you get in a minor accident. Your car is badly dented, and you are miserable. Rather than laugh at the chance occurrence, you act as if it were you who was dented. Your value is in something else, your car. As a result, you've become vulnerable. You've confused yourself with your car, your boat, your house, whatever. We have developed a value system in which we feel we earn something through hard work. We don't appreciate things unless we have suffered to obtain them. Making a difficult sale to an irate customer seems much more valuable than making an easy sale to a happy customer. We may celebrate the former and not think anything at all of the latter. All these values do is lead to hard work and irritation. We work overtime to get it done. Then we must spend time unwinding, usually by watching the television with a beer or a cigarette. What happened to simply enjoying life? We invent substances that the average child would never want to consume or drink without being told it was adult to do so. The substances I'm talking about include beer, wine, whiskey, coffee, cigarettes, and cigars. We then invent refined tastes around these substances. Thus, people spend years learning about good wine, great coffee, or what a great cigar tastes like. Part of our enjoyment of life seems to lie in developing a refined sense of these substances. Substances that the average child would never want to consume because they taste awful. And we consume them to unwind. Does that make sense to you? What I'm saying may be true, but what does it have to do with good trading? Part of the reason I'm bringing these ideas to your attention is that most good traders can identify with what I'm talking about. They are into simplicity and the joy of life. That's part of what makes them good traders. When you can learn to be these things, you'll find that your trading will improve as a result of just being. Let's continue with the idea that happiness comes from your beingness, not from things or from what happens. What most of us really want are mental states, such as joy, love, and freedom. To have those states, you need merely to step into them. They have nothing to do with what you have or do. Instead, they have everything to do with being. To raise the quality of your life, you need only look around you and rejoice. Are you having fun? Do you feel lighter? Are you experiencing more pleasure in the simplest things? Reality, as it is described in Laughing with God, is all possibilities. It is absolute possibility. In fact, God says, all possibility is infinitely interesting, whereas some possibility is somewhat interesting, and one possibility is a problem. In life, we get upset when we think that our possibilities have been limited. Yet, we also feel secure when we have certainty and possibilities are eliminated. Someone asked me a question one day about all the bad news in the markets. It went something like this. What is going to happen to the markets with the potential bear market, the devaluation of the dollar, and everything else that is going on? I find it a little scary, and it makes it hard to pull the trigger. What this person wants is one possibility, the market's going up. Yet the moment people feel that other possibilities are lost, for example, suppose someone says the markets will only go up. They act as if they've lost something or been robbed of something. What do you know? How can the markets only go up? We want the uncertainty that comes from not knowing. A critical difference between good traders and average traders is that good traders thrive on simplicity and not knowing. They simply go with the flow of the markets. If the markets tell them it's time for stock prices to go up, they buy. They may be wrong 60% of the time, but that is part of the game. They'll get out when the markets are no longer going up. They do this by simply observing what is happening and are joyful because they are going with the flow. They allow themselves to let their profits run because it's okay to be in the market when it is going up. They also allow themselves to get out because it's okay to get out when the markets start to do something else. What I've just described is pure trading. Its essence is simple. It doesn't require a lot of time. Instead, it gives you lots of time to play. It also involves seeing all possibilities and being in the flow of what is happening right now. You cannot do this if you are preoccupied with being right, doing hard work, or having money or profits. You can do this only when your mind is pure, and you can be at one with what is going on around you. Some simple tips for you to try. 1. Give up being right and embrace every possibility. You'll find that by not predicting the markets and enjoying the uncertainty, you are better able to observe what the markets are doing right now. 2. Add novelty to your life. Find 5 habits that you have and break them. If you put your trousers on with the right leg first, start with the left leg. If you listen to the phone with your right ear, pick it up with your left hand. Take 2+ hours to eat dinner and savor every bite. Go on a romantic holiday and make love in a new place every day in a different manner. 3. Pick several things that you do, especially in trading, and find a simpler way to do them. For example, if you are a day trader, open up a position and either take a loss or get out at the end of the day. When you do that, you are not tied to the market all day, and you may find that you take small losses and get huge profits. Simplify your entry technique and concentrate on exits. Or simplify both your entries and your exits and concentrate on position sizing strategies. 4. Spend a full day doing absolutely nothing except meditating or walking outside. 5. Make a new friend and teach that person how joyous life can be. Pick someone who needs this lesson. Vitamins for your soul to improve your trading. Giving vitamins to your soul may not have a direct, noticeable effect on your bottom line. However, these vitamins could prevent a disaster, and certainly will make you a lighter and happier person. Lighter and happier people usually make better traders and investors. Several years ago, I began the year with a resolution to do a lot of spiritual work. I was planning to do a lot of meditation during January and February. I had a 1-week spiritual retreat planned. In essence, this was to be a year to nurture my soul. Instead, what happened was that I spent December through February taking antibiotics for a bug that was resistant to antibiotics. My condition then worsened into chronic bronchitis or pneumonia because I had initially ignored it. I felt awful, and my illness took all the energy out of me. The last thing I wanted to do was any spiritual exercises or meditations. Vitamins for your soul. I believe in taking full responsibility for what happens to me. In most situations, I can explain exactly how I managed to create what happened, but not for the first few months of that year. I honestly had no idea how I went from wanting to do spiritual work to going through physical exhaustion. But that's what happened. During that time, I still had a strong urge to do things that might give my soul a charge, to feed it and nurture it. At the same time, I had no idea how to do that. Until the weekend, I found a book called Vitamins for the Soul .11. The book was just what I needed, but more important, it helped me classify soul enrichment activities. I was very strong already in some of the areas, but I had totally neglected many other areas. Focus on the moment. Mark Twain once said, "I've had many fears in my life, most of which never happened." So too, in my life I've noticed that I've had many worries, most of which never happened. Nevertheless, I can spend a lot of time being concerned about them. Yet the simplest solution is to concentrate on the opposite. What are your blessings right now? What are you grateful for now? Here are some interesting exercises you could do when the weather is nice, just to concentrate on the wonders of this moment. Spend some time outside and really stretch your senses. Smell the flowers. Take in the smells and enjoy them. Close your eyes and listen to the sounds of nature. Hear the birds. Listen for the wind. What other animals do you hear? Take in the wonder of it all. Or go to a magnificent place and take in the scenery. What do you see? Look everywhere and take it all into your soul. Notice the magnificence of the moment. Everything you think about is in the past. Even if you are feeling excruciating pain, what you actually are experiencing happened milliseconds ago. It's not what is happening now. Everything you think about and everything you worry about are in the past. When you release them and concentrate on the now, you'll find that everything is beautiful and peaceful. It's only our thoughts, based on our interpretations of what happened in the past, that cause upset and struggle. When you realize this, I believe that you'll have an enormous breakthrough in understanding who you really are. Try this out. Take 15 minutes each day to enjoy the magnificence of the moment. Find something beautiful and take in the sights, sounds, smells, and so on. Notice how wonderful it all is, and spend the full 15 minutes taking it in. When you are finished, give thanks. Notice what this does for your soul, how you feel, and ultimately for your trading. You'll be surprised. Just try it. Spend some time laughing. Norman Cousins, the author of Anatomy of an Illness, believed that he cured himself of cancer by using laughter therapy. He found lots and lots of funny things, and spent the day laughing and enjoying himself. The effect of changing his outlook to one of humor seemed to have immense healing effects on his body. However, there is no need to wait until you have a serious disease to practice taking vitamins for the soul. I enjoy jokes and will laugh when something is funny, but until recently, I have not made a conscious effort to bring more laughter into my life. It's something that is quite easy to do if you set an intention to do it daily, so try it. Find some movies that are really funny and watch them. Better yet, invite some friends over and watch them together. There's only one rule for how to watch them. Laugh as much as you can. If something is a little funny, force yourself to laugh out loud. It's not that hard, and it's contagious. Also, save internet jokes. You probably have friends who get lots of internet jokes and would be happy to send them to you. I personally have at least 4 people who send me jokes all the time, and I save them. I can read through my old files anytime I like, and some of the stuff is really funny. Get your friends to start sending you jokes and send them jokes as well, and save your collection. Memorize them and tell them often. You'll find that when other people laugh at your joke collection, you'll laugh with them, even though you know the joke and the punchline isn't a surprise. You'll get immense joy and fun from telling a joke to others. Let me give you an example. About 10 years ago, one of my friends told a joke at dinner having to do with the 3 biggest lies a cowboy tells. 1. My truck is paid for. 2. I won this belt buckle at the rodeo. 3. I was just helping that sheep over the fence. When my wife, who had just arrived from overseas and wasn't used to American humor, heard the joke, she didn't get the last lie at all, and the process of explaining it to her put everyone at the table in stitches. I don't even think the joke was that funny, but it's one I'll always remember because of my wife's reaction when I was explaining it to her. Telling jokes to others can brighten up your soul. Practice doing it. A healthy soul is a happy soul that experiences joy, laughter, and lightness. This doesn't mean that you must avoid looking at the suffering that occurs all around us, but it does mean that you avoid letting that suffering steal your joy over the many blessings God presents to us. The opposite of joy is not necessarily sorrow. It's unbelief in the true nature of your soul or the essence of God. In reality, all suffering is simply believing the thoughts that occur to us. Many of us as adults have to relearn how to laugh, and that starts with a slight desire to do so. One of the amazing things about my wife is her laughter. She can laugh at almost everything, and I almost never hear her talking on the phone without hearing many bursts of laughter. It's pure joy to hear, and it's one of the many reasons I'm so attracted to her. But the real secret of laughter is to just do it. If something is the least bit funny, try laughing at it, even if it seems that you are forcing it at first. It becomes catching once you start. There used to be a video on the internet entitled Metro Joy. Unfortunately, I can no longer find it on YouTube, but let me give you an idea of what it's about. In it, a man gets into a subway car where everyone is very serious, either sleeping or deep in suffering through their thoughts. But the man that just entered the metro car just starts to laugh. At first, the others seem to think he's irritating. Of course, I'm reading their minds here. But soon they start to chuckle a little themselves, and with a little time, the entire subway car is full of laughter. The man then gets off the car and moves to another car. Whenever I watch it, I usually break out in pretty strong laughter. Read something funny before you go to sleep each night. Get a collection of cartoon books or joke books and have them by your bedside. When something strikes you as the least bit funny, laugh out loud. You'll find that it is contagious, and that the material becomes funnier and funnier. Finally, you'll find that young children are much less inhibited about laughing than most adults are. Thus, spend time with kids and see what they think is funny. Go watch a movie or cartoon with them. Laugh when they laugh. Here's your assignment with laughter for each day this week. Find something to laugh about each night before you go to sleep. In addition, watch a funny movie at least once a week this month. Enjoy it and have fun. Give it to God. About 10 years ago, a traumatic event happened in my life. It changed a number of my values. It also caused me to worry a great deal, mostly over nothing, and spend a great deal of time feeling sorry for myself. Essentially, a lot changed in my life, mostly as a result of my own internal creations. I hated how my life was different, and I became very concerned about it. Every day, I was just afraid of what might happen that day. It was not a great way to live. Ironically, I had spent 4 years going through A Course in Miracles and learned that what we think of as reality is an illusion. I understood that what I created was an illusion and that I created it. Nevertheless, I worried about it constantly, even though nothing happened. My values changed, and I stopped doing certain things that I used to do, yet nothing changed but the creation of new illusions. Although much of what I've said in the prior 2 paragraphs may not make sense to you, perhaps it will when I give you the solution, the vitamin for the soul. My solution was to make a God box. We keep this box in a special place in the house. Whenever something seems to really bother me, I do the following. First, I notice that I am spending a great deal of time in illusion, and that it is not food for my soul. Once I've noticed the impact this item has on my life, I take a small piece of paper and write it down. As I write down what's bothering me, I give it to God. In addition, I give thanks to God, knowing that He will take it from me. I then put the piece of paper in my God box and forget about it. I've noticed that an amazing thing happens when I do this exercise. A problem that once dominated my thinking suddenly disappears. If it doesn't, the problem usually changes in some way, and then I give the new problem to God the same way. To date, I've never had the same problem recur after I've offered it twice. Occasionally, I might have a thought about the problem, but then I realize, you just gave this to God. Are you now taking it back? The answer is usually no, and I automatically drop it. There is an interesting statement in A Course in Miracles that goes something like this. Everything is in God's control unless you have fear about it. When you have fear, you are taking control away from God and trying to control the situation yourself through your own creations. Perhaps this explains why the God box works so well. I strongly recommend this important vitamin for your soul. Practice this exercise for 1 week. Write down everything that bothers you. Even if you find yourself with a little irritation, just write it down on a piece of paper and put it in your God box and then forget about it. Give thanks for your blessings. A great book that I recommend is called The Marriage of Spirit, .14. It's a whole program to help you lighten yourself, and part of the program is to keep a daily journal. When I did the program, I wrote down all the issues and emotional turmoil that I seemed to be going through that day. When I finished writing, I did exercises to clear out the turmoil. What was interesting to me was noticing how much turmoil I could write down in that journal. The exercises seemed to work, but there was always something to write down. That surprised me since I had spent hundreds of hours of personal clearing work over the years. I'd expected to be pretty clear. I remember an old adage that goes, "You are what you think about." Actually, that's the law of attraction that you hear so much about these days. I'm very strongly in favor of personal clearing, because most people have major scars on their souls that they need to heal. However, I had cleared just about all of them as far as I knew, but I was still coming up with stuff. Then it began to dawn on me how much time I was spending in my life looking for things to clear. When you look, you always find something. As a result, I changed my focus to giving thanks each day. Instead of looking for issues, I spent the same amount of time writing down the blessings in my life and giving thanks for those blessings. Quite often the blessings are the same ones, but that's okay because I'm still thankful for them. I find that the process of writing down my blessings and giving thanks changes my focus entirely from the old process of finding my issues. What's occurred is a gradual lightening of my spirit. Again, this is a wonderful vitamin. Try it. Here's your assignment. Get a journal, and each day write down 5 blessings you've experienced, for which you are very grateful. In addition, if you find yourself worrying about anything or fearful about anything, write it down on a piece of paper and give it to God. Put it in your own God box, but remember that you have to be totally willing to turn it over to God and release it. If you don't give it willingly, you'll find that God is quite willing to let you keep it. The Secret Gratitude Journal is an excellent vehicle for this purpose. In addition, there is a free iPhone app called Gratitude, which serves the same purpose. Follow your bliss. When I first went through A Course in Miracles, I made a commitment to follow my bliss. Joseph Campbell stated in his remarkable series The Power of Myth that following your bliss is essentially following God's path. That seemed great to me. Do what gives me joy, and my life will work better. In 1986, I made a commitment to quit my part-time job. I was working 1 day a week on a job I hated. But that job was a security blanket. As long as I was part-time, I had medical benefits and the possibility of returning to working full-time again. Follow your bliss. I quit the job and got rid of the security blanket. 2 weeks later, my ex-wife unexpectedly lost her job and was not re-employed for about 9 months. However, we made it through that year without having to borrow much money. Everything worked out fine. By 1987, my own business was progressing. I decided that I needed to hire a secretary to keep up with the workload. However, I hadn't made that much money the prior year, and a secretary's salary would take up most of that. Nevertheless, I took the plunge, another sign of commitment. And that year was the first year I made a 6-figure salary. My business really seemed to take off from there. In each case, the decisions were difficult. I was giving up security and the status quo for something unknown. Even though I hated the known and loved what I was going into, it was very scary. By the way, these are all steps to show commitment, and I've already talked about how important that is. Along the way, through following this guidance about where joy seemed to be, I moved away from almost every attachment I had at the time, which included my first marriage. It wasn't working, and we couldn't seem to fix it. Much of this was very scary, even though I was moving toward more joy. In the end, the results were wonderful. It's a big step, but following your bliss is a very important vitamin for your soul. What do you love to do? You probably should be doing more of that. What do you hate to do? You probably should be doing less of that. At one point, when my business was already quite successful, I made a note of all the things I hated to do and all the things I loved to do. Guess what? All the things I loved to do were the things that made the most money for the business. They revolved around helping people, doing creative things, teaching my workshops, developing new products, and trading. Those were all things that made money. I hated the day-to-day routine of managing the business and all the details that came with it. Although I still have some of those tasks, I have elected to find people who do a much better job with those things than I ever could. Now I concentrate totally on the things I love to do. Make a list of what you love to do and what you dislike. If you love something, decide how you can do more of it. If you dislike something, determine how you can turn it over to someone else. You'll probably find that this simple act makes a tremendous difference in your life. Commit to love. I once attended a self-improvement workshop given by someone I considered very loving. Most of the workshop involved people bringing up problems, and he would lovingly help them release the problem. That was great, but I noticed that certain people would bring the same problem up over and over. In fact, one person, who might be described as a starving actor, had been to over 10 of those workshops and still was bringing up trivial stuff, almost as if he'd accomplished nothing. In fact, I'm sure he got in the workshop for free for being an assistant, but that means he probably brought up the same stuff over and over at each workshop. Nevertheless, the workshop guru laughed with him and gently took him through a release of his problem. My initial thought was, how can the instructor not react to this person's lack of progress? Then, he told me the secret. The secret was to love the person as he was. This means that he has no emotional investment in whether the person makes a change. He just loves the person. And that means he can respond lovingly no matter what happens. When I understood that, I really began to understand unconditional love. This section is all about being loving. That means loving everything exactly as it is, without making any judgments. Most of our decisions are made from fear and worry. I can remember numerous times in the past when I might have noticed that a future workshop we were doing had a very low enrollment. My natural tendency would be to start to worry about that. What if no more people enroll? What if there are not enough enrollments to pay for speakers' fees, much less the hotel? But what if we cancel? Then we have a bad reputation with the hotel because they cannot rely on us. We also lose all the marketing money we've already spent on the workshop. I could go on with that kind of dialogue and worry. When I do that, I'm operating out of fear, and that's not useful. Instead, I elect to operate from love. One way to operate out of love is to declare who you are. For example, you might make a declaration that says, I'm a loving, kind, compassionate man. Write it out, memorize it, and declare it to yourself so that it becomes second nature to you. When you make decisions, you'll then begin to say, what does a loving, kind, compassionate man do in this situation? He certainly doesn't make decisions that are based on fear. Instead, he bases decisions on love and compassion. Of course, the first thing that pops into my mind when I say that is, how can I handle this situation so that everyone wins? What more can I give to increase enrollment in this workshop? How can I add more value to this workshop so that more people can attend? Of course, those responses get a much different response than I would get by saying, we're going to lose a lot of money here, even if I cancel the workshop. Here's your next assignment. Decide who you are and make a commitment statement that reflects who you are. That statement might go something like this. I'm a powerful, generous, kind leader. Or, I'm a courageous, loving, compassionate woman. Write down whatever you think might fit you. Put it on a sheet of paper and memorize it. When you make decisions, read your personal declaration and act as if it were true. Once you've done that, make your decision. If you do it that way, you'll probably find that your results are much different in all aspects of your life. Meditate and listen. When the day's activities have ended, take time to meditate. Or, if you prefer, you might begin the day with meditation, whichever feels better for you. I believe meditating is very important. Here we'll just consider it as a soul vitamin. Sit in an upright posture with your feet on the floor, if you're sitting in a chair, or your legs crossed, if you're sitting on the floor. Breathe slowly, and notice the air going into your lungs and filling them. Notice where the air seems to go. In fact, you might want to control that by taking deep breaths and filling your lungs with air. Or perhaps you might want to allow your lungs to breathe by themselves, as they have been doing for some time. Just notice what happens. While you are noticing your breath, slow down or stop the chatter in your mind. Just concentrate on your breath. With practice, you'll get better and better at watching your breath. When you notice a lot of chatter going on, let it go and go back to watching your breath. When you do this on a regular basis, you'll notice several things. First, you'll notice that you have a lot of chatter. That's great. Just get it out of your system and allow yourself to quiet down. When stuff goes through your mind, notice that it's just the stuff of consciousness. It's not you at all. You are merely the awareness of that stuff going through your mind. Second, you might notice that you tend to fall asleep. If that's the case, great. You needed the sleep. And you get to refresh yourself with a little nap. You'll eventually notice that you are not the chatter in your head. Instead, you are the awareness of that chatter. Last, you might notice that you just slip into the space between your breaths. From this space come forth creativity, contact with higher realms of consciousness, and messages you may need to hear. Just listen. My recommendation is that you do this for about 20 minutes each day for an entire week. At a minimum, I think you'll find that when you do this for a week, you'll start to become more creative. The creative ideas may not happen while you are meditating, but you may find them flooding in at other times, and may find that they help you become a better trader. And another benefit of meditation, if you spend enough time watching your thoughts, is that pretty soon you will realize two things. Thoughts just seem to happen. You are not necessarily the thinker. You are definitely not your thoughts. Instead, you are the awareness of your thoughts. When you begin to observe that you are not your thoughts, and that your thoughts just seem to happen automatically without your doing anything, you'll reach a very powerful self-realization. And from this position, trading is much easier. Around 1990, I worked with a retired professor of engineering. We did some clearing work together. And at the end of that task, I taught him how to follow his internal guidance. His internal guidance took him a long way over the next 18 years. I again found myself working with him recently. Only this time I was the student doing spiritual work under his guidance. What impressed me the most was the purity with which he could watch the market and still do what it was telling him to do. This means he'd buy what was going up and sell it when it stopped going up. He'd also sell short what was going down and buy it back when it stopped going down. Over the 18 years, his personal account had grown big enough to be the size of a substantial hedge fund. All his money was earned through trading simple principles. Don't dismiss the value of vitamins for your soul. Breathe deeply. If you think about the essentials of life, the body can live without food for at least a month. You can do without water for several days, but you can do without air for only a few minutes. Air is absolutely essential for life, so why not promote it? Many of the ancient meditation techniques involved the breath, and with good reason. Dr. Harry Goldblatt found that rat cells deprived of oxygen easily develop malignancies, whereas normal cells did not. Athletes, who get much more oxygen than other people do, have a cancer rate that is 1/7 the rate of the average American. The lymphologist Jack Shields 18 has shown that deep diaphragmatic breathing is the most effective way to stimulate and clean the lymphatic system, and actually stimulates the immune system. Deep breathing multiplies the rate at which the body eliminates toxins. I'd like to extend this information and suggest that healthy breathing, enough to stimulate the immune system, not only prevents disease but actually improves performance. I suggest that you do the following exercise. At least once each day, take 10 deep breaths. Breathe in the following manner. Inhale for 5 seconds, starting the breath deep in your abdomen with your diaphragm. Now hold that breath for 20 seconds to help it oxygenate your blood and activate your lymphatic system. Finally, breathe out for 10 seconds. If this exercise is too strenuous, use a smaller number in the ratio 1:4 to 2. In other words, hold for 4 times as long as you inhale. Try this exercise twice a day for the next month and note how you feel. Chances are, if you commit to it, you'll find yourself becoming a little clearer, a little more open, and a little more receptive to what is really happening. If that happens, even if you are only slightly aware of it, you should notice a difference in your trading. However, all this assumes that you are following some of the other ideas in this book. By the way, the Hindus have developed an extensive set of breathing exercises designed to help the body and soul. These are called pranayama exercises and pranakriya exercises. If you like this one, consider researching these exercises and doing more. Discipline in meeting your goals. You should now have some specific goals in your trading. If you don't, I suggest that you develop some. However, even if you do, you may need some discipline to help you meet those goals. As a result, I thought I'd focus on helping you meet your goals. 1. Divide a general goal into specific steps. Most trading goals are huge. To reach a large goal, I'd suggest that you divide it into specific steps. It's much easier to accomplish small steps that you can imagine doing for the rest of the year or the rest of your life than it is to fulfill a giant goal. Start with something that is easy and make sure you can accomplish it. A resolution to make 50% this year in your account could be broken into a number of steps. 1. Look at ideas that might help improve your trading. 2. Test each idea and see how much improvement you will get from it. And 3. Implement the best idea by following the top tasks of trading. In fact, your resolution might simply be to follow the top tasks of trading each day and notice what that means for you. Many of those tasks are mentioned throughout this book. By the way, if you risk 1% per trade, you need to make only 1 hour per week to have a 50% return. In addition, keep track of your mistakes, as described in Part 5 of this book. Improving your efficiency from 85% to 95% will have a huge impact on your profits. 2. Make promises to yourself and include the reason for a promise in the resolution. Suppose your promise to yourself is to do a daily mental rehearsal, one of the tasks of top trading. The way you might phrase that is to promise to do a daily mental rehearsal, to plan ways to increase your discipline and not make mistakes. The second statement is much easier for you to follow through with on a regular basis. Also, make sure that the promise you set is something you want to do and not something someone else wants you to do. If I tell you that you must do a daily mental rehearsal, you are not likely to do it. In contrast, if you decide that this kind of rehearsal is important for your well-being and your trading, you are much more likely to do it. 3. Determine your triggers. If you are setting a resolution, it is probably because you want to do something you have not been able to do. There is probably a reason for your inability to do it, certain triggers that set you off. What are those triggers? Are there environmental triggers, such as the presence of certain people or certain conditions? Are there certain internal feelings that set you off? What are those feelings, and when do they occur? Once you determine your triggers, you are much more prepared for them. I strongly recommend doing extensive mental rehearsal around the issue of dealing with those triggers. Awareness is a big part of keeping your resolutions. 4. Look at the positive side of your new goal. When we get into the act of keeping our resolutions, we sometimes feel that we are denying ourselves. Instead, look at the positive side of what you are accomplishing. Turn on something positive. For example, if you are trying to stop taking trades that have nothing to do with your system, concentrate on the joy of following your system and making money. Concentrate on the joy of the new behavior instead of the negative thing you are trying to overcome. You'll find that moving forward is much easier. 5. Keep a diary of whatever it is you are working on. A lot of what I've suggested involves mental awareness. Most people are unaware of the big picture that's involved in accomplishing a goal. However, when you keep a diary that lists your accomplishments and your thoughts, you'll find it much easier to understand what is going on inside of you. Listing your accomplishments is also a form of reward. When you focus on your accomplishments, especially if you've followed step 1 and set small steps toward your total goal, you'll feel great about what you achieved and where you are going. 6. Make it okay to give in occasionally. If you are attempting to make a major change, you may have occasional setbacks. If you view a setback as a failure, the resolution is over. You can give yourself a bad name. In contrast, if you make it okay to have occasional setbacks, you can keep going. It's just a setback. Realize that a setback is an opportunity to learn something about yourself. What happened? What were your thoughts? Write down all that information in your diary and determine what you can learn from it. You may discover a new trigger, and then you can make a plan for getting around that and other triggers. In any case, forgive yourself for the setback and move on. Quite often, setbacks are due to inadequate preparation. Perhaps you didn't do enough research with respect to your trading. Perhaps more mental rehearsal was needed. Perhaps you discovered something about your thought process that you didn't expect but now can use in your preparation. What additional preparation can you do to make sure you move ahead toward generally keeping your resolution? 7. Reward yourself throughout the process. You need to acknowledge accomplishments early in the process. The first few days will probably be the hardest. Consequently, when you get through those days and accomplish your goals, find a reward. Make the process fun through a system of rewards. Removing stored charges. We talked about the belief examination paradigm earlier in this book, and how charges, stored feelings, will cause you to keep limiting beliefs because the charges give a belief energy. Now it's time to remove some of those charges. Let's say you've done the belief exercise at least 100 times. You've come up with a list of common charges attached to a number of your beliefs: fear, anger, rejection, guilt, loneliness, uncertainty, losing control, abandonment. What do you do with this list? First, let's look at why we store feelings in the body. We judge a feeling to be good or bad. We are willing to feel the good feelings, but we are not willing to feel the bad ones. This probably was conditioned by our parents, who said things like this: "Big boys like you shouldn't be afraid, and if you do that again, express anger, I'll really give you something to be angry over." The net result is that we attempt to suppress negative feelings. For example, the hero in action movies doesn't show his or her emotions. Heroes just stuff their emotions and get on with their lives, and you probably learn to admire such people. Now let's look at what might happen when you stuff an emotion inside that you are not willing to feel. For example, suppose you see an attractive person and you go up to meet him or her. This person has nothing against you, but he or she has had a bad day. As a result, his or her reaction to you is, "Get lost. I'm not interested." You feel rejected. You don't like the feeling, and you stuff it away. You are not willing to feel it. You probably mumble something like, "I didn't want to go out with him or her anyway." What happens now is that you have stored rejection in your body. Also, you've probably created a part of you that doesn't want to feel rejection again. In fact, its job is to never again feel rejected. A week later, you see another attractive person you want to approach. You start to move toward that person, and suddenly this part of you says, "Remember what happened last week?" And it releases a little of the stored rejection. The new person has done nothing, but you already feel rejected. However, you start to approach him or her, even while that part keeps warning you and releasing more stored rejection. One result might be that you give up and never approach the person, feeling that the possibility of rejection is so strong that you don't want to take a chance. But remember that this second person has not even seen you or reacted to you. You are just reacting to what might happen. The second possibility is that even though you are anticipating rejection, you approach the person and say something like, "You wouldn't want to go out with me, would you?" This approach almost guarantees rejection, and you get to be right about it. Now rejection is a permanent part of your experience unless you do a feeling release on it. I know of 3 feeling release exercises that you could do right now. Welcoming the feeling. Just releasing it. Using the park bench exercise. Welcoming the feeling. Think about one of the beliefs you'd like to get rid of but cannot. Let's say there is some rejection involved in that belief. It's charged with rejection. Think about the belief and about releasing it. When you notice rejection coming up, welcome it. Open your arms wide and just welcome the feelings you have. I personally find this exercise to be quite powerful. Feelings are meant to pass through you, not be stored inside you. Welcome it and release it. Just releasing it. The second exercise amounts to releasing the feelings as they come up. Just feel it and let it go. It's that simple. For more information on how to do this, read Hale Dwoskin's The Sedona Method. I strongly recommend that you take the Sedona Method course, which includes 20 CDs on feeling release. It covers these methods and quite a few more. Actually, the only time it is difficult is when you resist doing it. The resistance magnifies the feeling, and you then have to deal with the resistance. If the feeling seems like a Category 5 hurricane, it means you are resisting it strongly. Notice that you are resisting it. Then just welcome it and let go of the resistance. Once you have done that, releasing the feeling should be easy. Using the park bench technique. I advocate using the third method, the park bench technique. When a feeling you are resisting is dominating your life. Let's say a loved one has died, and you are preoccupied with grief. Let's say you are spending 15 hours a day grieving over your loss. If this is happening, I recommend the park bench technique, in which you actively commit to the feeling. You are spending 15 hours a day with it, so why not commit 1 hour each day to really feel the feeling? Find a neutral spot, such as a park bench. Sit down on the bench and commit to feeling the feeling as strongly as you can for 1 hour. What you'll find is that you probably can do it for 20 minutes, but then the feeling gets boring and starts to dissipate. However, you must do it for an hour. After the first day, you may find that you are not thinking about it so much. The next day, you decide to spend 45 minutes on the bench thinking about the feeling. And after 15 minutes, it gets boring, but you must do the whole 45 minutes. The next day, you reduce it to 30 minutes, then to 20, then to 10, and then down to 5 minutes. Pretty soon it seems to go away instantly, and you are not thinking about it all day. Why does this happen? It happens because you've been willing to feel it actively. Now look at the beliefs you want to change that have a charge on them. Practice one or more of the feeling release techniques just recommended on the charge behind those beliefs. Pretty soon the charge will be gone from the beliefs that aren't useful, and you'll simply be able to replace them all with much more useful beliefs. How do you know when you've done enough self-work? In my experience, no one solves all of his or her personal issues. Working on oneself is a lifelong task, and when you get through one area, another one usually appears. If you've never solved or even recognized an issue of self-sabotage, the first one you deal with will have a major impact on you. When you get through the first major issue and know it's finished, the feeling is tremendous. You know you've accomplished something major, perhaps something you've been working on for a long time. My belief is that once you've worked through 5 major areas, you are generally a changed person. Furthermore, I have faith that you will continue to work on yourself and be able to deal with anything else that gets in the way of your goals. Here are some examples of what people have said after working through a major issue. Example 1. A good answer. I have noticed that whenever I feel stressed and out of harmony with the universe, I am acting out of fear. That fear may be related to being liked, feelings of unworthiness, or fear of making mistakes, but it is unimportant what the fear is related to. The fact that a decision is based on fear puts it out of harmony with the universal order, whereas decisions based on love increase that harmony. To tell the difference and make a decision that is based on love, I need to notice the way my body feels when the decision is being made. If my body reflects feelings of tension, anger, or irritation, I am acting out of fear. If my body reflects feeling of relaxation, well-being, or harmony, I am acting out of love. I am trying to increase my attention to this before the decision is implemented. Here is an even better example. Example 2, an excellent answer. I am working on insecurity, fear of failure, and fear of loss, which I believe are related, and which I'll collectively refer to as insecurity. This has been a difficult issue for me to realize existed and work on, but as I've worked on it and other issues, it has become easier to deal with. I have used a variety of approaches toward insecurity, one of which has been to look back over my life to see where the insecurity comes from. I didn't have a deprived, unloving childhood. Nevertheless, I have been able to recollect insecurity being an influence on my behavior in a variety of situations over many years. For certain situations that I didn't handle well, I've gone back in my mind to recollect what I was thinking and feeling, to analyze my emotional state. I've replayed the situations in my mind a number of different ways to show myself how they could have been better, and why my insecurity was unjustified and a hindrance. I have been a very successful professional. I think my insecurity has, in part, been a driver for my worldly successes, and it has influenced me to undertake new, major challenges in my life. Fear of failure or loss has motivated me to do well in situations in which excellent performance was needed and expected by third parties, such as clients. However, it also has caused me to refuse to recognize that a situation has soured and requires a change in action. I have had to learn to tell myself that it's okay to lose or fail at something, to cut my losses and move on. I believe these insecurity issues are bound up with self-esteem issues, and so I have been working more and more on self-esteem. As I have done so, I have felt much better able to deal with the insecurity issues. This is the case because I have found that self-esteem issues, if they are recognized and acknowledged, are somewhat difficult but tractable. I have gone through several periods of change in my life and in the way I think about myself. I find the process hard, but manageable. For me, it requires stepping outside myself, and trying to view myself as others may see me. It also involves putting any situation in which I have reacted insecurely in perspective. When someone has gone through 5 major issues that he or she can explain in this manner, I know that person can handle anything. Here are 2 examples of unacceptable answers I've seen that reflect shallow self-awareness. Example 3. An unacceptable answer. My marriage is a major issue. My spouse and I effectively separated, and then decided to reunite, but the result was not satisfactory to me. As a result, I found a counselor and persuaded my wife to begin counseling. The counselor likes us, and my spouse likes him, and so we seem to have established a stable counseling relationship. However, I don't feel the marriage has improved at all, and I don't have an image of how counseling will help. However, I trust the process because the counselor is very experienced, and because I don't know any alternative. My response to this answer: what's wrong with the marriage? What are the issues involved? How do they reflect what's going on inside you? The answers to these questions may be acceptable responses for several areas you are working on. Example 4. A second unacceptable answer. Health and diet are where it all starts. The quality of the substances you put in your body is equal to the quality of energy, decisions, and actions you get out. When I've taken the time to nourish my body properly, the level of focus that becomes available is very high. Ideas flow, and being creative comes easily. My response to this answer: this is a statement of beliefs. It reflects very little internal awareness. If there is a struggle with diet, that is, because of a feeling of being deprived when you can't have something or similar types of feelings, that may be an area you are working on. I hope you can see the difference. Now ask yourself, what are 5 major issues I have had in my life? How did I produce those issues, and how did I make them non-issues? When you can answer this question from a position of transformation, it's safe to move on. Otherwise, continue working. End of Part 1. Part 2. Developing a working business plan. Have a plan for your trading/investing. What happens when someone gives you a tip or idea about the market? Do you get excited about it and want to act on it? Do you become skeptical and suddenly distrust the person who gave you the tip? In some cases, you probably act, and in other cases, you become skeptical, possibly depending on the source. Have a plan for your trading. A better alternative is to notice whether acting on the tip fits into your business plan for trading. If it fits, you then do more evaluation in accordance with the criteria you use in your plan. If it does not fit, you simply discard it, saying, "That's not something I know much about." The only correct response to a hot tip is to determine if you can integrate it into your business plan for trading. If it does fit and suggests that you do more evaluation, fine. That's a proper response. An improper response is to go out and buy an exchange-traded fund, ETF, of Japanese stocks, just because some guru recommended it. This suggestion constitutes a test for your plan. Do you have a plan that helps you deal with new surefire can't-lose tips you've heard about? If you do not, perhaps it's time you developed one. This means developing a thorough business plan to guide your trading. Here's a brief outline for what needs to be incorporated into your business plan. This outline is for individuals who are trading or investing for themselves. Those of you who are running a trading business need something much more elaborate. 1. What's your mission statement? What's the real motivation behind your trading? 2. What are your goals and objectives? You cannot get from A to B easily unless you know where B is. 3. What are your trading and market beliefs? You cannot trade the market. You can only trade your beliefs about the market. As a result, it's a good idea to identify those beliefs. 4. What is the big picture that affects the world markets, and do you have specific trading plans that fit that big picture? 5. What is your tactical trading strategy, and what is its expectancy? What setups do you use before entry? What is your timing signal for entry? What is your worst-case loss going to be? And how is it determined? How will you take profits? What is the expectancy of that methodology? We deal with this topic in Part 3 of this book. 6. What are your position sizing strategies? The part of your methodology that tells you how much throughout the course of a trade. We deal with this topic in Part 4 of this book. 7. What are your typical psychological challenges and problems in following this plan? What is your plan for psychological management for dealing with these problems? 8. What are your daily procedures? 9. What is your education plan? How do you plan to improve yourself continuously? 10. What is your disaster plan? What can go wrong, and how will you deal with each item? 11. What is your planned income and budget for expenses? Are they realistic? 12. What other types of systems are important for you, and how will you plan for them? Examples are keeping your data accurate, explaining results to clients or family, conducting research, and keeping track of your trades and your accounting. These are all important. 13. How do you relate to business systems? As someone who just needs to be told what to do, as someone who is the system and becomes a perfectionist, as someone who develops systems so that others can do the work, as someone who invests in systems? 14. How do you prevent mistakes and avoid repeating them if they occur? This is the topic of part 5 of this book. Having a plan of this nature is so important that I rank it among my top requirements for traders. Perhaps it's time you develop such a plan. Having a mission statement behind your trading is critical to your success as a trader. You probably have specific goals in your trading. If you don't, I suggest that you develop some. Surely part 1 of this book gave you some ideas. Once you have goals, you may need some discipline to help you meet them. As a trader, you need a mission statement to form the core of that discipline. At one point some years back, I spent several days doing creative brainstorming on ways to take my company to the next level. Part of that process involved determining our mission statement. I'd always known our mission, but I'd never before put it down on paper. I also had not thought about expanding our business with respect to that mission. Developing and understanding your mission is a critical process and one you should go through for your trading. It also fits with the overall idea that you must understand who you are and who you want to be before developing a business, because your business will develop out of your statement about who you want to be. In that brainstorming session, I learned a process that will work for running any successful business. When I thought about it, it was obvious that it was a process that applies to trading. The first part of it is to create a mission statement for your trading business. Here are a few examples of what that statement could be for you. Help others to prosperity by becoming a highly successful money management firm. Build a hedge fund with at least $250 million under management, with the specific goal of helping doctors who don't know how to invest or trade their money. Produce an infinite wealth stream, enough passive income to meet my expenses, within 5 years. Be a vehicle for me to grow money-wise and as a person. Fund a charitable foundation. Help others grow as traders by transforming themselves. Second, you need to evaluate new projects with respect to the mission statement. When you have a mission statement, you can evaluate new projects or new systems constantly with respect to that statement by asking, is my objective in this project critical to the mission of the company? People are always asking me to do this project or that project. For example, one trader who was a sound engineer by training said that when he came into town, we could start working on developing specific meditations for traders. Although his idea was a great one, it was very low on my list of mission-critical tasks that needed to be done in the near future. As a result, it didn't happen. Without such a process in place, I'd probably spend most of my time doing non-critical tasks, and thus not accomplishing what is important for the company to meet its goals. Most traders treat their trading business like a hobby. In other words, they don't treat it seriously. For example, some constantly look for new or better systems. Others trade discretionarily. Still others manage the money of a few friends or relatives without thinking of the consequences. These types of objectives need to be evaluated with respect to your trading mission statement to see how they fit. Let's make the assumption that you have a mission statement for your trading business to produce an infinite wealth stream for yourself within 5 years. Infinite wealth basically means that if you stopped working, including working at your trading business, you would have enough passive income, that is, your money working for you, to maintain your current lifestyle. You could accomplish this in 2 ways. First, you could accumulate enough money that if you invested it in T-bills or some other form of passive investment, I'd recommend a good hedge fund over T-bills because you can get a much better rate of return, you'd be infinitely wealthy. Second, you could automate your systems for trading so much that you could hire someone else to execute the trades for you. Let's take a look at some of the objectives we introduced to see if they fit with this mission statement. Let's try this new system to see if it works better. If you have a system already that can help you achieve this goal, you probably are just wasting your time. For example, I've known people with systems that can easily net 100% or more each year, who constantly jump on the next new system that comes along. However, If you don't have a system that will meet your objectives, you need to evaluate both your current system and the new one in terms of R multiples, expectancy, opportunity, and the concepts involved to see if you have something that logically makes sense. For example, if you assume that you will risk 1% per trade, you have to net only about 8 R per month. Remember that R refers to your risk in each trade, to make 100% per year. Think about it. In most cases, someone else's new system will not help you, because that person has not evaluated it in these terms. It usually takes only a slight change in your thinking to net you great rates of returns. Thus, looking at a new system is probably a total waste of time in light of this mission statement. I want to make rule-based discretionary trades because I think I can outperform a mechanical system. This objective might fit within the mission of infinite wealth if your plan is to accumulate a certain amount of money and then invest it in various forms of passive income to produce infinite wealth. However, if you plan to produce infinite wealth through your own trading, this mission does not fit within the objectives because you will always be tied to your trading. You will always have to work if you make discretionary trades. In the second case, you should abandon the idea of discretionary trading. I'll manage money for a few friends and relatives. This objective could be a total distraction from your mission, or it could be a means to an end, depending on how you treat the practice of managing money. For example, are you going to do it for free or charge a fee? If you plan to charge a fee, that could help you meet a monetary target. However, are you prepared to deal with the psychology of the people for whom you are managing money? Do you have back-office accounting procedures in place? Is the effort to deal with accounting and your clients worth the distraction to your trading? If the answer to any of these questions is no, this is not a mission-critical objective and should be abandoned on the spot. How does each piece fit the big picture? If the project is mission-critical, you need to allocate human and capital resources to it. Let's make the assumption that your idea seems to be mission-critical. Let's say that your mission is to open a hedge fund with a target of at least $250 million under management, and some friends are asking you to manage their money. To have large amounts of money under management, you need to produce above-average returns with very little risk. For example, a system that would help you achieve this mission would be one that would earn 15% to 25% each year, with no more than 1 or 2 losing months a year. If you have that kind of system in place, accepting clients' money probably would be useful. If you don't have such a system in place, client money probably would be a major distraction. Let's say you have the system in place and decide to accept money. The next step is to determine the human and capital resources you need to allocate before undertaking the step of accepting client money. What else do you need to have in place before accepting client money? First, you have to have accounting systems in place. If you don't, you need to 1. Find someone to help you with your accounting, and 2. Put a system in place to report to clients. This amounts to allocating either human or capital resources to your objective. Second, you need to have systems in place for dealing with client inquiries, including new clients. How will you market to clients? How will you deal with clients who want information about their accounts or about your trading? Again, since you have decided that accepting client money is mission critical, you need to allocate human and capital resources to putting these systems in place. Next, you need a timeline for the project. If you decide that the project is mission critical and have allocated resources to it, you have to have a timeline for the completion of the project. Without a timeline, you could go on forever with the project. Finally, you need a feedback and monitoring process for the project. This process will keep you on track and prevent you from wasting resources. When you allocate resources to a project that is mission critical for your trading business, you'll need to have a way to monitor its progress. How will you know that resources are being spent properly? How will you know that progress is satisfactory? If someone else is involved, how will you know that that person is doing a good job? These are key tasks to perform if your trading business is to accomplish its mission. What are your goals and objectives? You cannot get from A to B easily unless you know the location of B. Most people don't think too much about their objectives, what kinds of returns they want, or what kinds of drawdowns they are willing to accept. However, you cannot develop any sort of trading system, at least one that you'll be happy trading, without knowing these things. For example, you may decide that you want to make at least 20% and have a peak-to-trough drawdown of no more than 10%. That's a reasonable objective, but it's totally different from the objective of someone who wants to make as much money as possible and not worry about drawdowns at all. Those two objectives would have entirely different position sizing methods to get there. Let me illustrate how many possible objectives you could have. First, you might want to maximize your probability of achieving a certain goal. That goal could be anything from making a profit to making 1000% or more. Second, you might want to make sure that you don't have a drawdown of a certain size from your peak equity. That drawdown could be anything from, say, 2% to 100%. Third, you might want to minimize your probability of losing a certain percentage of your starting equity at the beginning of the year. For example, you might be willing to have a large peak-to-trough drawdown, but you might want to minimize the chances of losing more than a small amount of your starting equity. That could be 1% up to, say, 75%. Fourth, you might want to achieve the highest possible equity at the end of the year and maximize your chances of achieving that goal. Fifth, you might want to maximize the probability of having the greatest chance of meeting your goal and the smallest chance of experiencing your worst-case drawdown. When you consider that it's possible to put many numbers into these objectives, it is easy to see how each trader/investor can have different objectives. In fact, there are probably as many objectives as there are traders. What are those objectives for you? Deciding on your objectives is about 50% of developing a trading system. Developing a system without an objective becomes an insane exercise, although many people do that. Sometimes, I have traders play a game against other traders. After every 10 trades, the group that has the highest percentage gain wins $15, but groups that have a drawdown pay $1 per percentage point they are down, and then another $2 for each percentage they are down over 20%. Thus, going bankrupt could cost them $180, plus a buyback fee. At the end, the group with the most equity wins everything in the pot, including any drawdown penalties. Notice how this could create lots of potential objectives. Win the game at all costs, and be willing to go bankrupt several times. Attempt to win the $15 at the end of each round. Make sure we never drop down as far as a 20% drawdown. Lose as little money as possible. Try to win the game, but don't draw down as much as 20% over 10 trades. The interesting thing about this game is that when they start trading, it seems to be a zero expectancy game. They can go long, 80% losers but no really big losers, or short, 80% winners but huge losers when they are wrong. What everyone begins to understand by the end of the game is that even with a system they know very little about, it's very important to 1. Have clear objectives, 2. Develop a position sizing strategy to meet those objectives, 3. Know when to change the strategy because it is not working, and 4. Understand how important the position sizing strategy is to guide their trading. For example, here is a typical comment from someone who recently played the game. Even with a zero expectancy system, we formulated clear objectives and accomplished those objectives with flying colors. My trading will never be the same because now I understand the importance of objectives and the power of position sizing strategies in meeting those objectives. Market beliefs. When you trade, you probably think you trade the markets. However, you don't trade the markets. Instead, you trade your beliefs about the markets. What do I mean when I say we only trade our beliefs about the markets? Let's look at some statements and see what you believe about them. The market is a dangerous place in which to invest. You are right. The market is a safe place in which to invest. You are right. The market is a dangerous place. Wall Street controls the markets, and it's hard for the little guy. You are right. Market professionals have lots of limitations, which makes it easy for a little guy like me. You are right. You can easily make money in the markets. You are right. It's hard to make money in the markets. You are right. You need to have lots of information before you can trade profitably. You are right. Do you notice the theme? You are right about every one of these beliefs, whether you said yes or no to any of them. If you don't believe in any of these statements, what do you believe instead? You are right about that too. However, there is no real right or wrong answer. Some people will have the same beliefs and agree with you, and others won't. Therefore, whatever your beliefs are about the markets, they will direct your thinking and your subsequent actions. Let's look at one concept that works: trend following. To be a good trend follower, you must start by identifying something that is in a trend. Once you've done that, you must jump on the trend, perhaps after a retracement. Note that I've made two statements about trend following. Both of those statements are beliefs. They are not necessarily true. They are simply my way of organizing reality for myself. A lot of people, that is, other trend followers, may share that reality, but it's still based on a couple of beliefs. You could have beliefs that would make it very difficult to be a trend follower. The stock just made a new high. How could I possibly buy a stock that has made a new high? Trend following works for some people, but when I get in at a new high, that's likely to be the turning point in the market. Whenever I enter the market, it's a signal to Wall Street to do the opposite of what I just did. Momentum trading doesn't work. You have to buy value. The stock market doesn't trend very well. It tends to be very choppy. Note that these are all beliefs. Yet how could you be a trend follower if you believed any of these things? Are you beginning to see how beliefs shape your trading behavior? Let's look at another method that works. Value trading. To be a value trader, you probably have to have one or more of the following beliefs. When I buy things that are undervalued, and I am patient, I'll see them move toward fair value, and I'll make money. When I buy things that are undervalued, they eventually will become overvalued, and that's when I should sell. Something is undervalued when, fill in your definition. Something is overvalued when, fill in your definition. There are many successful value investors, but you probably couldn't be a value trader if you believe that things must be moving rapidly in your favor for you to make money. Also, if you buy undervalued stocks, it can take forever to make a profit, but you want to make money each day. My purpose in getting you to explore your beliefs about the market is to show the major influences on the way you trade. Write down your beliefs about the market and the way you should trade. You have not completed this exercise until you've written down 200 or more beliefs. If you find this difficult, try looking at charts and predicting what will happen next. Our beliefs may fall into the following categories. What do I believe about the market? What do I believe about trading? What trading concepts do I believe work? What risk management principles work? How do the best traders trade? Who are some of the best traders? And what do they believe that I believe? What are the secrets to making money in the markets? What have I read lately about trading that resonates with me? When I try to predict what a stock will do from a chart, what concepts come up for me? To give you a sample, here is a list of my beliefs, one from almost every category. 1. I believe we are in a secular bear market, in which market valuations, price/earnings ratios, will go down to the single-digit range. However, crisis implies opportunity if you understand how to take advantage of what's going on in the market. 2. I believe that whenever you enter a trade, you must know the point at which you are willing to say, "I was wrong about this trade," and get out. This is your stop-loss point. 3. I like to trade stocks that are very efficient. That is, trending up or down with very little volatility. 4. Sometimes there are a lot of efficient stocks to select from, and sometimes one cannot find any. 5. When you get stopped out of a trade, make sure, if you can, that you don't lose more than 1% of your equity in that trade. 6. The best traders trade by finding a niche that fits them and then becoming an expert in that niche. 7. One of the secrets to making money is to have well-thought-out objectives and then understand that you meet those objectives with position sizing strategies. 8. What have I read about trading lately that resonates with me? I just noticed a Warren Buffett quote: "Diversification is a substitute for not thinking." Each belief fits me. They may not fit you at all. However, I believe that you'll have trouble as a trader/investor if you ignore some of those beliefs. That is, the 2nd, 5th, 6th, and 7th, but that's another story. Anyway, your job is to now write down 10 to 15 beliefs from each of the 9 categories. When you've finished the exercise, look over each belief and run it through the belief examination paradigm. Who gave me the belief? Where did it come from? What does this belief get me into? List at least 5 things. What does this belief get me out of? List at least 5 things. Is this belief useful? Or is there a more useful belief? Does this belief limit me? How could I change it so that it is less limiting? If I can't change it, is there a charge on the belief? If it's appropriate, ask questions such as, how do I define that? And how do I know? My work in modeling top traders suggests that if you are to do well, you must have a trading system that fits you. By writing down your beliefs, you are well on your way to developing a trading system that does that. Understanding the big picture. I've been in business as a trading coach for over 25 years. And during that time, I've seen many trends in investing. I've seen a commodities boom, a forex boom, an equities boom, a day trading boom, and even a total disaster period in which there was a boom only in things that one might short. Because of these vastly different trading conditions, I think it is very important for people to be aware of the big picture. The big picture will tell you what's going on, and at least make you aware that what's working now could end suddenly. In fact, it usually ends when you are most excited about it. I would like my clients to be aware of and endure all market conditions rather than become casualties when bubbles burst. As a result, in Chapter 6 of the second edition of my book Trade Your Way to Financial Freedom, I presented 6 major factors that I believe influence the big picture. Factor 1. The U.S. debt situation. The interest on the official debt of the U.S. government is now equal to the nation's annual deficit. The debt situation is more interesting than one might think, and there are some serious questions you must ask yourself. Did you know that the Federal Reserve Bank of St. Louis has published a study saying that the United States is bankrupt? Understanding the big picture. Factor 2. The secular bear market. Point 2. The U.S. stock market has had secular cycles, long-term cycles that last 15 to 20 years, throughout its existence. These are not stock price cycles, but cycles in the price/earnings ratios of stock prices. A bear cycle started in 2000 and could last until 2020. Again, there are some serious issues here that you need to familiarize yourself with as a trader/investor. Factor 3. The globalization of the economy. The fastest growing economy in the world is now China, and India is making immense strides as well. China is consuming vast amounts of raw materials, and this has had some interesting economic effects on the world. As a trader/investor, there are some important questions you need to ask yourself about this factor. When the economy collapsed in 2008, everything collapsed. Factor 4. The impact of mutual funds. To understand the potential impact of future events on the U.S. economy, it's important to understand the role of mutual funds and the ways their managers think. Mutual funds certainly do not follow any of the principles of trading outlined in Trade Your Way to Financial Freedom and this book. You need to think about the impact of this and some of the things that are going to happen in the future. In 1982, when the great secular bull market started, there were only a few mutual funds. When it ended in 2000, there were more mutual funds than listed stocks. My prediction is that very few funds will be able to withstand the secular bear market with their philosophy of being 100% invested. Thus, when a new secular bull market starts, there again will be very few mutual funds. Perhaps this time they'll be allowed to go to cash. Factor 5. Changes in rules, regulations, and policies. Sometimes trader trends, such as day trading, are ended suddenly by changes in regulations that are designed to protect the investor. Factor 6. Human beings tend to play a losing economic game. If you really understand this factor, your chances of long-term success in the market are greatly increased. But do you know that the big players have a different set of rules than you do? You cannot play by their rules, and if you trade the way they do, you are probably doomed. As a result, there are some serious questions you need to ask yourself. Most of the big players do not understand risk. They just think they do. That is why banks have rogue traders. It is why banks are leveraged 30-to-1 with debt instruments, which include subprime mortgage loans. One of Alan Greenspan's comments after he left as chairman of the Federal Reserve was that he thought big financial companies would self-regulate in terms of risk. Big banks make their own rules about playing the game, and that allows them to win. However, they definitely don't understand risk as I define it. There are other major factors that are probably too long-term to consider right now. But what about the long-term impact of global warming? Is the United States on the downside as an economic power? What happens when the US dollar is dropped as the world's reserve currency? When you think about these factors and keep tabs on them, you are not surprised when the stock market suddenly crashes or major reversals suddenly occur in whatever you are doing. Thus, it is very important to develop a business plan, as a trader, that takes into account some of these factors. I publish a monthly diagram that to me illustrates what is going on in the world. It comes out every month in my free weekly email, Tharp's Thoughts. Figure 2-to-1 shows the big picture as of May 28, 2010. Today, the entire world economic picture can be represented by 100 days of ETFs representing various aspects of the global economy. On May 28th, the economy looked rather dismal. The top performing areas are in green, average areas are in yellow, and the worst performing areas are in brown and red. And most of the top performing areas are that way because of relative strength. For example, the interest rate sectors are mostly green, but they are strong only relative to the other areas. And this is at a time when many people think we are still in a bull market. Notice that most of the countries of the world are either reddish, very bad, or brown, below average. The economy of the world, according to this, is not very healthy. Do you think a regular look at the big picture in this manner would be useful? I certainly do. Doesn't it give you a better picture of how to trade in the current conditions? What it tells you is obvious. Even though most professionals are invested, the market really is not that strong at all. It's important that you understand that my idea of the big picture could be entirely different from yours. For example, there are multiple ways to look at market types. I look at the market from a 100-day perspective, but you might be an intraday trader, so only what the market is doing today is important for you. I measure volatility relative to what it's been over 50 years. You might be interested in volatility relative to the last 100 days. Similarly, there are many ways to look at what is going on in the market. I look at the relative performance of the trading vehicles in the world with respect to what their ETFs are doing. You might think ETFs are risky and don't represent the world. I look at secular market trends that could last 20 years. You might not care about such long-term cycles. You simply may want the market to be volatile enough to trade today. What's important is that you have a way to monitor what's going on so that you'll know when the big picture changes in the context of what's important for the way you trade. What's important, of course, depends on your beliefs. What are your tactical trading strategies? Part 3 of this book discusses trading strategies in more detail, so I'm going to list only a few of the questions you should consider asking yourself here. 1. What are 3 non-correlated strategies you can use that fit the big picture? 2. Do these 3 strategies cover the 6 major market types: bear volatile, bear quiet, sideways volatile, sideways quiet, bull volatile, bull quiet? In other words, do you know how your system performs in each of these market types? Do you have all of them covered, or are there some markets that you'll avoid trading? 3. What setups do you use before entry? Are they any more accurate than 50%? 4. What is your timing signal for entry? 5. How do you assess the reward to risk potential of the trade? 6. What is your worst case loss going to be, and how is it determined? 7. How will you take profits? 8. What is the expectancy of that methodology? How good is the system? How easily will it be with this system to use position sizing strategies to achieve your goals? You'll need to keep up with the current market type, making sure you have a system that will perform well. If you do not have such a system, your only alternative is to stay out of the current market type. How will you achieve your objectives through position sizing strategies? Using position sizing strategies to meet your objectives is an important part of your trading business plan. You need to have specific objectives. You have to understand that your system doesn't achieve your objectives. Your position sizing algorithm does that. If you understand this concept, you are way ahead of many, if not most, professional traders, those who cannot practice position sizing methods. For example, most bank traders and even many company traders don't know how much money they are trading. How could they practice position sizing strategies? Also, most portfolio managers must be fully invested, and so they can practice their position sizing strategies only by being overweight or underweight with certain stocks. In my opinion, that's not a strong position sizing method. You, fortunately, do not have any of these limitations, so it is essential for you to understand this topic thoroughly. Read Part 4 of this book and then study the definitive guide to position sizing, dealing with your challenges. Part 1 of this book involved assessing your strengths and challenges and developing a plan for dealing with them. You now need to summarize that material and include it in your business plan. How prepared are you for a trading career? How did you do in the tests given earlier in this book? What is your trading personality? What are the strengths and challenges of that personality? What are your beliefs about yourself, especially the limiting ones? Once you have all this material written down, you need to develop a plan for dealing with it. You should answer the following questions. 1. What do I need to do on a daily basis to keep myself disciplined and on track? 2. What are the major emotional issues that come up for me, and how will I deal with them? 3. What is my ongoing plan for working on myself so that I avoid self-sabotage? 4. How can I make myself more efficient as a trader? 5. How can I recognize problems as they come into my trading and deal with them before they become self-sabotage? My suggestion here is to read through all the ideas in Part 1 about how to deal with these sorts of issues on an ongoing basis. Practice working with them, and then develop a regular procedure that you can follow. This area is very important and will give you a huge edge. Let me demonstrate how important that edge is with an example. In January 2008. A large mutual fund hired me to give a one-day workshop for its traders and analysts. I was speaking in a room of about 30 people who were controlling about $50 billion. They wanted me to speak about two topics in which they needed coaching: position sizing strategies and psychological management. Initially, I talked about position sizing methods, but they were clearly handicapped because mutual funds are required to be nearly 100% invested. They could not short, and they could not retreat to cash in bad times. I explained how they could buy their benchmark and then overweight and underweight certain components as a position sizing method. It was clear that they partially understood that concept. Their best performer in 2007 was someone who had an 8% weight in one particular stock throughout that year. It had had a stellar performance, but it was down more than 25% from its high, and he still had the 8% weighting in that stock. I don't know what happened to him, but the entire market they were trading went down another 50% by the end of 2008. Then we moved on to the more interesting topic of psychological management. This was especially important since they had little control over their position sizing methods. I decided to show them an exercise to help them solve a problem, and the group picked its star performer to demonstrate the process. However, the star performer picked being in front of the group as his problem. This totally defeated the purpose of the demonstration. It was clear that the group was not interested in the topic of psychological management. The participants ended the topic early, as they decided that it was more important to spend the rest of the day analyzing the market. I checked that fund toward the end of 2008, and its performance was disastrous. Many funds would close the year with a similar performance. However, the fund couldn't do anything to practice good position sizing strategies in such circumstances, and it didn't care about psychological management. I'm wondering how the participants feel about not taking that part of the talk seriously. Perhaps they were okay because their performance benchmark was also disastrous. Can you begin to see the huge edge you will have over many professionals if you take these topics seriously? What are your daily procedures? You need to develop a routine that will keep you performing at a top level. What's on the list will depend on you and what you need for peak performance. Here are a few things to think about. Do you need a pre-start of day self-assessment? What would that consist of? How will you do it? How will you make sure that you do what you need to do today? What will you do on a daily basis to prevent mistakes? What will you do on a daily basis to keep track of your trades and your thoughts about trading? What statistics will you monitor to keep track of your trading? Here are just a few of the things you can monitor if you choose to do so. R multiples, expectancy, standard deviation of monthly return, daily profit and loss, mean and median, annualized Sharpe ratio, ratio of largest winning day to largest losing day, volume of trading, number of winning and losing days, largest winning day, largest losing day, largest drawdown in dollars, largest drawdown in time, largest drawdown in percentage. What will you do on a daily basis to work on yourself? Diet, exercise, spiritual practices, for example, meditation, trading practices to keep you in top form. Spend some time thinking about these areas, and develop checklists that you can use to monitor yourself. What is your education plan? Part of your plan should be continual improvement. How do you plan to do that? Companies that invest in themselves and their employees tend to grow and prosper. How will you invest in yourself? What do you need to know to improve your trading in terms of both skills and knowledge? What do you need to improve about yourself to improve your performance? How will you get that information? How do you know your source is reliable? Remember that experts are not necessarily what they appear to be. The financial meltdown of 2008 to 2009 should convince you of that. Make a list of everything you need, and then develop a plan for ways to develop those skills and that knowledge. This should be a major part of your business plan. Worst-case contingency planning. The idea behind a worst-case contingency plan is to brainstorm what could happen. Approach the brainstorming as a creative exercise. If you do it from that perspective, there is nothing negative about it. The purpose behind this planning is to prepare for what could go wrong. The market usually will find something that you are not prepared for and give you a great test of your fortitude. When this happens and you are not prepared, you become stressed and your brain shuts down. Typically, you respond in a very primitive way, but with a lot of energy. For example, you may scream loudly. However, this does you very little good and hurts your account. Brainstorm everything that could go wrong. You might find that such problems fall into 6 broad categories. 1. Personal emergencies. For example, one of my clients had a personal emergency and left a number of open positions to go deal with the emergency. When he returned, he came back to a financial emergency. 2. Unexpected market disasters. Examples include the 1987 crash. No one expected the S&P 500 to move 20% in one day, but it did. This category also might include events such as 9/11, when the stock market closed down for a substantial period. We actually had training for our Super Trader program that was like playing war games, designed by someone who used to design games for one of the US intelligence agencies. In that training, we had a scenario in which the World Trade Center was blown up. The reaction: this is so unrealistic. Nothing like this would ever happen. But it did, and within about 5 years after we'd done the exercise. 3. Equipment and data problems. What if something happens to your computer? What if something happens with your software, especially if you don't know it's happening? What if something happens to your data? What if you get faulty data and false signals? What if something happens to your phone or your internet service? You need backups for all of these things. As the cartoon shows, what if your computer gets stolen? 4. Major life changes. These changes include having a baby, going through a divorce or a major breakup with a loved one, moving your office or your home, a personal or family illness, a personal or family death, and anything else that might be a major distraction, such as a lawsuit. These events tend to occur over a long period, and you need to plan how you'll respond to them. Sure, you can just stop trading, but perhaps there is another way if you work it out and practice it. 5. Psychological and/or discipline problems. This is where you plan for it and make sure it doesn't wipe you out. 6. Broker problems. What kind of performance should you expect from your broker? What will you do when there are errors? Bad fills. A broker who questions your judgment. All these are items you should consider. How to make a worst-case contingency plan. Make a list of everything that could go wrong in each of these 6 categories, plus anything else that might fit in a miscellaneous category. Plan on having at least 100 items. Fewer than that and the list will be too short. Once you've generated the list, come up with 3 ways to deal with each situation. If you have 100 items on the list, you need 300 solutions. Determine which solution is the most effective for each problem and rehearse it thoroughly until it is second nature. This is the real value of worst-case contingency planning. The more you can rehearse globally, the less you'll have to deal with in a daily mental rehearsal. Most people prefer to ignore this section of their plan, but it really is the most important. Sometimes, even good things can be a disaster. In my company business plan when the company was much smaller, I once considered that one of the worst things that could happen would be a large order that might take me several months to fill, because I didn't have enough stock. People often don't think about how good news can be a disaster. Mentally rehearse your disaster plan. Trading at a peak performance level requires that you know exactly how to react in any circumstance. What happens if you are holding 8,000 shares of IBM and it suddenly drops 13 points? What will you do? What if you are day trading S&Ps with about 5 open contracts, and suddenly you get a call from the hospital and learn that your spouse has just been in an accident and is in serious condition? What will you do? What will you do if there is a major stock market crash? What if the Dow Jones Industrial Average moves up 20% in one day, and you are short? Will you know what to do in these circumstances? The key to peak performance is to have a set of well-thought-out rules to guide your behavior, and be able to withstand anything that might cause you to break those rules. You need to set those rules before you trade and rehearse your disaster plan as soon as you have one. Normally, you have a conscious processing capacity of about 7 chunks of information. However, under stress, the body releases adrenaline into the bloodstream. Blood is diverted from the brain, which normally gets 50% of the oxygenated blood, to the major muscles of the body. You suddenly have more energy, that is, to run away. But your thinking capacity is diminished. Typically, when under stress, you revert to primitive behavior, but with more energy. This is fine if you must run away from a predator, but it is disastrous if you have to think quickly about a market situation. The trick to dealing with such a situation is to rehearse it in your mind before it happens. When you've done that, your unconscious mind will know exactly what to do, and stress won't be a factor. You'll just do it. I was introduced to the power of mental rehearsal by an NLP instructor who was a world-class cyclist. To maintain his world-class standing, he had to cycle about 100 miles a day on Southern California roads, about once every 5,000 miles. something dangerous would happen. Several of those mishaps nearly cost him his life. As a result, he decided that if he was to live a normal lifespan, he had to give up cycling or take some sort of precaution. He chose the precaution: mental rehearsal. He took his cycle to a field, sat on it, and for 2 hours thought through every scenario he could come up with that could be disastrous. For each potential disaster, he worked out a course of action and rehearsed it many times in his mind until it seemed like second nature. Several months later, he was doing his daily cycling, traveling at a high speed in heavy highway traffic. When he happened to look down at his front tire, he noticed that it had a bubble. Within seconds, a major blowout was going to happen. Before he could even think about it, he did a flip over the handlebars. He landed on his feet with the cycle on his back. If he had not done that, the tire would have burst, probably within the next few seconds, and sent him flying into oncoming traffic. When he stopped to think about what had happened, he realized that the flip was one of the behaviors he had rehearsed in the field that day. Mental rehearsal had saved his life. It could save your life too, at least your financial life. Go through steps 1 through 3. Use your mind to make certain that you are ready for whatever the markets bring. 1. Before you start trading, make sure you have a plan to guide your trading. When do you exit to abort a trade? When will you take profits? What could distract you from your plan? 2. Once your plan is developed, brainstorm to determine everything that might go wrong with your plan or your life. This is not an opportunity to be morbid. Instead, consider it a creative challenge to prevent problems. 3. Develop a plan of action for everything that could go wrong. Mentally rehearse that plan until it becomes second nature. Systems. Other than trading systems. Every business has many systems. By system, I mean something automatic that really helps people know what to do in running a business. For example, a fast food restaurant will have systems to help the employees greet customers and serve them within a minute. It also will have systems for preparing food, cleaning up, managing cash flow, dealing with the problems that arise, and so on. Your trading business needs such systems too. Cash flow. The most important of those systems has to do with cash flow and budgeting. What is it going to cost to run your business? What does equipment cost every month? What does internet connectivity cost every month? What do you pay for data? What do you pay for education? How about subscriptions? What else is part of your regular monthly outflow? How about research time and perhaps your salary? All this should give you an idea of what you need to make every month to have a profitable business. What is your hourly wage as a trader? Are you making less than the minimum wage? What is your salary? All this should be answered, or at least well planned, in a very detailed manner in your business plan. Customer relationships. When trading for others, you will need to get customers. You'll need some sort of marketing of your business. How will you legally let people know about what you can do for them? That should be a complete plan, or at least a section of your business plan. Next, you need to know how to keep your customers happy. How will you deal with customers who call on a regular basis with questions about your trading? That can be a real distraction. What will you do to minimize the need for your customers to call you? For example, you might want to have a newsletter go out to them weekly or monthly. How will you report results to them? How will you manage things when your results are poor? Just as important, how will you manage things when you do well and your customers get excited and want that performance to continue? Back office management. The next issue is your back office. How will you keep track of your customers? How will you send statements to them? How will you keep track of your performance, especially if you are managing a lot of individual accounts? How will you handle bookkeeping? These are just a few of the questions you'll need to answer with respect to your back office. You need to plan for this. Data management. How will you manage your data? What if there are errors in the data? What if you have errors in your trade fulfillment? How will you deal with checking data? Is your historical testing adequate for making decisions? For example, if you test 30 years of S&P 500 data, are you testing on today's S&P 500 or testing the S&P 500 data that actually existed for the years of your testing? Does your data account for splits, dividends, and any other adjustments? If you are trading currencies, do you have 24-hour data? For how far back? If you are trading futures, do you have continuous contracts? What happens if there are errors in the data you are testing, or, worse, errors in the data you are trading? What's your plan? Research. What beliefs do you have about conducting ongoing research? Look at the systems you are happy with, and determine how well they will work in the 6 market conditions. Do you have something that will work well under each condition? If you do not, what's your plan for developing something, or are there certain conditions in which you just will go to cash? Operations. How will you run the business? What equipment is necessary for your business? How will you make sure that everything works? Do you have other responsibilities? And if so, how will you coordinate them with your business operations? What will you do if anything critical goes wrong with any key aspect of the business? These are a few of the many questions that should be answered in the operations section of your business plan. Organization and management. What kind of organization will you elect to use for your business? Sole proprietor? Corporation? Limited partnership with a C corporation as a general partner? Will you elect to have trader status on next year's tax return? How will it all work? In addition, will you do it all yourself, or will you have employees? It's difficult to become infinitely wealthy trading on your own because you still have a lot of work to do. However, if you can design trading systems that your employees can run for you, that's another story. The 4 quadrants. I probably did 15 seminars with Tom Basso, who was featured in The New Market Wizards by Jack Schwager in the early 1990s. We also talked endlessly over meals, and I interviewed Tom twice in my monthly newsletter. During that time, one statement that Tom repeated was this: "I'm a businessman first and a trader second." His business-like approach was always the key to his success, and I'd like to explore that approach in detail in this section, because the quadrant you operate on in business also will apply to the way you operate as a trader. In the late 1990s, I also did several infinite wealth workshops with Robert Kiyosaki, and so I became very familiar with his thinking. In their book, The Cash Flow Quadrant 4, Robert Kiyosaki and Sharon Lechter explore 4 types of people. These types are separated by their cash flow patterns. People on the left side of the quadrant, the employee and the self-employed person, work for money. People on the right side of the quadrant, the business owner and the investor, have money working for them. The 4 quadrants are fascinating because they also perfectly describe various types of traders. The most successful traders are going to be on the right side of the quadrant. The employee trader works for the system. If you work at a job, which just happens to be trading, and get paid a salary for doing it, you are an employee trader. Kiyosaki doesn't really define the word system in his book despite using it extensively. However, he gives many examples of systems. For example, the Marine Corps has a system that allows Marines to accomplish their objectives with a minimum loss of life. Soldiers either follow the system or die. Similarly, as I mentioned previously, McDonald's has many systems. Each franchise runs on hundreds of systems, and that is why McDonald's is successful. Employees follow the system, or 1. The franchise folds, or 2. The employees are fired. Thus, remember that employee traders work for systems. They don't necessarily understand the systems. I believe this is the key to why they are not necessarily good traders. Bank traders, corporate traders, some mutual fund managers, and even people who have a job and just happen to trade on the side are good examples of employee traders. These people are motivated by security and good benefits. Thus, a top bank trader might make $50 million for the bank. However, she doesn't make that money. The bank makes the money. This trader simply takes a salary and probably gets a bonus for doing well. Employee traders work at a job. They get paid with a salary, which is taxed before it is given to them. They work to get paid, which is their primary motivation. They would like to get paid more by doing better quality work. But their primary thinking is that if I do X, I'll get paid. For them, the security of their salary and their benefits are more important than the money. I once considered working with the Forex traders of a large New York bank. The treasurer gave me a good idea of what I was in for when he made the following statement: "I don't want any of our traders making over 20%. If they make over 20%, they could lose over 20%. Furthermore, they'd want huge bonuses, and then they'd be making more money than I make." Even though this man was a key person in the bank, he was still an employee and had an employee mentality. I've noticed that the worst traders I work with are typically employee traders. They know the least about trading, and they generally make very poor traders. Furthermore, people who have an employee mentality and a full-time job, that is, they are into security and benefits, also make poor traders when they try to do it as a vocation. For example, most people consider stockbrokers to be traders. However, stockbrokers are really employees, to the extent that they receive a salary, who are paid to sell stocks. They are self-employed, see the next category, to the extent that they depend on commissions. When employee traders approach trading, they usually bring the employee mentality into play. They want to be told what stocks to buy or what the market is going to do. They are used to being told what to do, and they abhor making mistakes. Bank trading rooms, for example, usually hold daily meetings in which the employees are told what they should be doing during the day. Furthermore, they are told that they have to trade, even if there are no good ideas, because that is their job. That's the employee mentality, and it doesn't fit into good trading. The self-employed trader is the system. The self-employed trader is someone who has quit his or her job to be independent through trading. These traders do not like to have their income be dependent on others. Instead, they want to rely on their own hard work. They want to control the situation and do it on their own. Most of the traders I work with have this sort of mentality in regard to trading. The self-employed trader is quite often a perfectionist. Everything has to be perfect. These traders will settle for nothing less. Thus, they need a perfect trading system and are always searching for something better. They are also likely to be into discretionary trading because a mechanical system cannot do it as well as they can. Most self-employed traders are usually off searching for ultimate control, looking for a holy grail system that perfectly predicts market tops and bottoms. The results are usually very unsuccessful. When self-employed traders are taught principles such as expectancy, trading for large R multiples, and position sizing strategies, they have a chance to become very successful. The successful ones usually realize that they have limited capital and thus start to manage other people's money. When one starts to do that, many other systems come into play besides the trading system. Self-employed traders usually insist on doing everything themselves and subsequently run into severe limitations in terms of time and know-how, and they experience much frustration. The result is usually failure. Most people who attempt to be professional money managers approach it from the self-employed perspective. Are you in one of these two quadrants? How about the people advising you? Are they in one of these two quadrants? Now let's look at the two quadrants on the right side. The business owner trader owns and develops the systems. Let's look at the people who take the next step. They treat their trading business as a group of systems. They make those systems as automatic as possible, and then train other people to run them. You cannot be a perfectionist and develop automatic systems. However, you can develop such systems and free yourself. Let me give you two examples. The business owner traders I have met are total systems traders. Everything is computerized. Data come in, computers process the data, and orders are sent for execution automatically. These traders constantly look for ways to make everything automatic. If a task is repetitive, they computerize it to eliminate the need for a human being. The result is that the business owner trader can leave the business in the hands of someone else and do other things. These traders know the systems will work because they have developed them. The systems might not be perfect. They might not make huge returns, but they work consistently within the parameters for which they were designed. Furthermore, business owner traders also have systems in place for getting new funds, dealing with clients, managing the back office, and doing research on ongoing systems. When an employee leaves, they can train someone else to run the system that was handled by that employee. There are several steps to becoming a business owner trader. The first step is to be able to develop or purchase all the systems needed to run the business. As an example, the business owner would know that position sizing strategies are a key portion of a trading business and have a system to account for that. He or she also would have systems in place to manage the research, the data, the back office accounting, and the other people who are involved, all the things we've talked about in this part of the book. Once their systems are in place, business owner traders must find employees to run the systems. This requires good leadership skills. A business person will own the system and hire good people to run it. Thus, the business ends up generating money for the trader without requiring the trader's time. The business and its employees work for the trader. The investor/trader invests in systems. Traders become investors when they invest in systems that give them a good return on their capital without requiring additional work. For example, if you read Warren Buffett's criteria for investing in a business in my book Trade Your Way to Financial Freedom, you'll find that a key criterion for him is investing in businesses with good systems that produce a high rate of return on the owner's equity. Once such things are found, no additional work is required. The money just rolls in from the investment. The trader/investor has money working for him or her. End of part 2.